inside for your pocket. For your pocket. October 2020, something happened with the government. That is say we forget for where? For Zumba, by the way. Man, I tell ya, I know they move that way. I know they move that way. Don't make me move that way. No, I'm not built that way. Far across Gaza, look at my sideways. Yeah, I know come niggas for just play. In the meantime, I became me. How you want time, make you tell me. If you need speed, I be spelling. I go right behind the steering. I go run up, can you share me? I'll be on no Zumba, by the way. 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 Come here to you.
Yes, hello everyone. Hello everyone. Good morning, good afternoon, good evening. Let's even cap it with good day to you, irrespective of where you are joining from. And I'm saying big welcome to every one of us. Welcome to our time out with Victor on Financial Modeling Bootcamp. If you are here with me as well, I'm quite sure you can see what we have on our screen. While registering for the session, we asked you to tell us something fun about ourselves, even though some people still took this to workplace. Yes, workbox. We just tell us something fun about you, right? Something fun. So if you are looking at my screen, I'm quite sure you will see a display. Someone is saying, I love watching football. Look at your comment. I'm quite sure you will see one of your comments. Said, I love playing video games. That's fun. I love salad a lot and reading self-development books. Who is that? I'm quite sure you know yourself, right? I love improvement on daily basis. Is that really something fun about you? I love Semo and Egusi. Thank you for that. Who is that person? Now someone is saying, I love tennis. I love table tennis, love sports. I love the game of chess. Are you sure you're up to that? Let's see. Okay, so I love to buy and collect books. Not necessarily to read. Yes, this is something fun. This is something fun. You also agree with me, right? But to have them for ease of access and a quick skimming. Yes, I have one of my boss like that. Someone said I love beans. I'm quite sure you see that here. I love to play musical instruments. I'm also a music person. I love that. I love video games. In fact, someone even said if they can take that as a full-time job. I love watching football. There are some people that do that, right? I look you want to play video games. This is the person. I just want to play video games for living and go punky jumping every month. But you need to make money, right? I see myself as the most quiet person around. Is that something fun? Everyone is always quiet at a point in time. I still love watching animation. Okay, cartoon, cartoon, cartoon. Yes. Yeah, I really wish to still be a baby. If I am not learning, I am teaching. Okay, great tutor. I'm a movie buff. Tell us one interesting movie you've watched so far. I'm a musician. I love music. I'm an introvert. Is that something funny about you? Many of us, we are both introverts and extroverts. Okay, I'm funny. I think I'm funny too. I'm innovative. I'm innovative. I'm a glitch, but I wish the amount I balance daily belongs to me. Okay, that's something fun, right? Okay. Okay. Some dark jokes, right? Like meeting new people and learning from them. All right. So we love that. That's something fun. Love music. Terrible dancer. Okay. We are. I think that league belongs to a lot of us, right? My friends call me a part-time financial engineering student and a full-time graphic designer because I'm passionate about both. Okay. Okay. All right. Outside of the career, yes, something fun. I like designing graphical content and coding related to jobs. Okay, I love that. People say I like work. and don't have time to flirt. Is that really something fun? I think with your response, we can see that, right? Prior to now, I hate Excel. Okay, what's the update? You did not finish that. If financial analyst that has passion, okay. Now, someone is telling us their more like their career or everything. Or okay, but it's really not that something fun. Something outside the box. It says in accounting and a finance profession. Okay, I'm quite sure you know yourself. We wanted something fun about you, right? Something unique, something outside the work box. Some of us we love work too much, right? Okay, always love to create a lively environment. Okay, maybe we make you one of our MC. Aside being an accountant and high interest, okay, you guys love work. Something fun should be outside work, outside work. I'm also an MC and a sketch artist. Okay, we have one MC in the house. I'm quite sure you know yourself. You are reading your comment as well. So cool. I'm a cool person. Is that fun? Okay. Excellent chaser. What are you chasing? Right? Tell us something fun about yourself. You are fun. Having two biblical names makes me the most holy man on earth. Give them, I think that should be Joseph Joshua. I love that combination. I'm a capital market analyst. Okay, see now, all this work before. Calm down, chill, chill, chill. Right? You learn more when it is fun. I'm a lead guitarist in music. Yes, I'm an advocate of lifelong learning. Okay. Okay, we keep learning every day, right? I'm inquisitive and ready to learn new knowledge. Is that fun? Is that fun? I think everyone wants to learn, right? I'm multidimensional. Okay, you need to clarify that for us. I'm passionate about learning financial modeling. Is that something fun? We need to take some people to court, right? I'm very passionate about fintech. Is that fun? I believe teaching is one of the best way of learning. Okay, so I take the opportunity to share the little I know. All right. I think we are going to invite this person one of these days to come and share their own learning. I can believe I can do anything. Okay. Being positive. I can clap with one hand. We need this person to come and display this. Yes, we need this person to clap with one hand. Like, is it like this? I need to make that sound. I have interest. Right? I enjoy design. I have each sense of humor. All right. So I like action movies. I like data and sharing insights. Perfect. Love that. I like psychology. Psychology is actually a great course. Yes. Though some people don't value it. I like reading. I like red wine. Thank you. Something fun. Red wine. Maybe you supply us one of these days, right? So we have a get together. I like teasing colleagues in the office. Okay. Okay. All right. All right. Tisa. I like to cook. I like to think I'm an Oliver Pope. Hmm. I'm quite sure you need to give us more, to enlighten us more. I love Afrobeats. I love being so bad. That's something fun. Thank you. I love cooking and sporting. I love dancing. I love food. This is regular. I just realized I don't. Okay. Okay. Okay, please try and find out. Try and find out, right? Try and find out. I love going on adventure. That's interesting. I love learning new things and I love teaching, right? I'm quite sure as you are seeing this comment, you are also trying to figure out what your own comment was. I love listening to classicals. Yes, I love music. I love nature. And then to relate with it better. Okay, adventure we help you do more of that. I love playing and watching football. Okay. Okay. I love playing video games, right? So once again, I'm saying a very big welcome to every one of us. If possible, you can just share your video with us and just say hello to every one of us. All right. I'm saying my own hello. In case you can share your own video as well, I think that would be great. That would be great. That would be great. That would be great. Can we just do that? Can we just do that? Can we just do that? Kindly share your video with us just for 1 minute. 1 minute. We'd like to see your good looking face. Ibrahim, we have two people in the house. What's happening? No lights? This guy is from Nigeria. Those guys are from Nigeria, right? Yes, yes, Razak. Yes, good looking. Stay close to the window. Okay, you guys like staying close to the window. Razak, good to see you. Abdul Shukurat, right? Afsat, Sadiq, thank you, thank you. Afsat, I'm seeing you look man. just share your video with us for some seconds, right? Or maybe a minute. And just to remind us, I have my wonderful colleague in the house as well that will be taking us on some valuation concepts. All right. When I'm introducing our supporters, I'm definitely going to introduce him. Let's share a video and let's say hi. Say hi to the pics. Say hi to the pics. Stay relaxed. Right. This is not a lecture. Right. So I want you to stay relaxed. These are the things you know already. We are just bringing it out and pointing it out to you that see, you know this thing. This is all this is saying. So Amarachi, good to see your good looking face. Yes. I hope it's weekend over there. Yes. Over here is weekend. Is weekend. Trust me. And Abraham, good to see you. Good to see you. Yeah, I know. Don't worry. You don't need to do makeup. Yes. We like you like that. Don't worry. Don't do makeup. Don't do makeup. Oluwatimileyin, close to the window as well. Good to have you in this session. All right. I know today's weekend, and most of us we ought to be resting, right? And that will bring me close to my discussion. Most of us today is Saturday, and you ought to be resting, right? And which means the reality of it is this: there's nothing that is free, right? There's nothing that is free. That's what I want you to understand as human being, right? Is either the person that is offering it as a cost, or to you that you are taking it, there's a cost. Now, today Saturday is supposed to be out there, try to relax, chill out with some, at least it's been a great week so far, but you are here. Time is one cost on its own, right? I'm supposed to be somewhere as well, maybe trying to make one or two cash or chilling out, and here we are. And so as such, I really want us to appreciate this by having as much commitment that we can have, right? We might be strict on some rules because the fact that you are able to make it here, right? I'm quite sure you have some other things to do and still make that sacrifice. So we need to be able to compensate you for that sacrifice, your data subscription and all those kind of things. Some of us try to juggle between different network, and you still put that commitment here. That is a cost. It's not until when you take money out from your bank account that you know that you are incurring some certain costs. So please, as much as possible, let's try to value this. We did not collect any money from anyone. This is totally free, but the fact that it's free does not mean it is totally free. There are costs that you are incurring at your hand, your network, your time. Should have would have been using that to do something else. Our economics guys will call it opportunity cost, right? So once again, a very big thanks to every one of us, and welcome to our time out with Victor. So I'll try and stop sharing my screen, even though some people are just coming in to share their screen with us now. Don't worry, we love you, and a very big welcome to this session. All right. So let me just stop sharing my video so that we can all concentrate on my screen. Yes, I think that will be good. Okay, so just to point some things out to us, we will not be sharing the recording of this session. So which means we want you to be 100% attentive. We are not sharing the recording of this video, but we make sure everything is well explained to us, and you always have activity after the session. Financial modeling is best learned when you are doing it yourself. Trust me, I can do it, you understand, but if you don't get to do it yourself, there's no magic to it. You will forget. Yes, there's no magic to it. So we have a lot of activity. This will be this is hands-on boot camp. Yes, it's not as if I will just run you through like one express road, and we want you to make use of this. All right, this is an investment to every one of us. So once again, I'm glad you made it. I think we have over 200 people that actually applied, right? We shortlisted it to around 80 plus, but now we are having around 53 in the live session. And remember, only the people that made it to the live session will have access to the next session. So as I said, there's always a cost to it, right? And submission of your task, which will be what will make you learn at your own pace as well when you get to do it yourself. So once again, our sponsor and our supporters, D Brown Consulting. I currently work with D Brown Consulting, and yes, they've been a great support. So a lot of resources and all those things. In fact, I think we have a plan on running a free mock exam. So in case you want to get certified as a financial modeler, all right, you might want to jump on this so that you try your exam or your financial modeling skill and get certified. So we also have one independent body that certified you as a financial modeler. As I said, we are not sharing the recordings, please. I want you to be 100% active. Yes, understand it, give you activity, apply that. That's the whole thing. All right. And big thank to Microsoft, right? Because I'm Microsoft's most valuable professional, which is more like the highest recognition given by Microsoft themselves for being good at what you do, and also for your community service, sharing your knowledge. And to my wonderful colleague Adedolamu Shogelola, financial analyst, right? Uh, Valuation and modeling analyst, is also a tax guru. Yes, trust me on that. And he works with Deloitte Nigeria. Adedolamu, I think we is currently online. So please, would like to see you. We like to see you. How are you doing? How are you doing? You'll be the one to take us on the valuation parts of valuation concept as a whole, right? I'll be the one to run us through the at least the basic modeling of a thing. We build it together. Then when we are done, we will now come in, and that's when you go ahead with the valuation. So Adedolamu, if you're there with us, we like you to, yes, see my man, Adedolamu. Yes, you can see that he's gapped it. So he's a fine man with a lot of money and cash. I kind of like your background. Remember to unmute your mic, unmute your mic, unmute your mic. So we say first of all,
Okay. He's
introduction.
a fine man indeed. Don't mind Victor. Yeah, Victor is actually my very good friend, and of course we are colleagues. We are both financial analysts. So I'm so glad to be supporting him in this great work. Of course, I know he's impacting so many people, sharing his knowledge. Trust me, it's not easy to be sharing what you acquired, you paid to acquire, and you're sharing it for free. And we have somebody that is willing to do that for us. We really appreciate this. And so I thought of it like, okay, so the least I can do is to, to support in terms of rendering my own, my own skill, and just take us through, since he will be taking us through the modeling. So I think I will just support him with the evaluation aspect. And like he rightly said, 100% attention will be required, and we really need everybody to pay attention, because we are going to use his model to do valuation. So more like we are going to value the company we are going to build a model for. So of course it is imaginary, but that's just to understand the basic concepts when it comes to modeling. Of course, modeling and valuation, they go hand in hand. Without modeling, well, some people just say forecast, some people call it budget and all that. So what we are doing, we're trying to do is a startup. So of course there is no forecast, there is no budget, it's a startup. So of course, how do we value such a company? So it's going to be an interesting class, and I'm so glad to be supporting a very good friend. All right, welcome guys, welcome once again.
All right, thank you, Adedolamu. So please, if you appreciate Adedolamu, we have this and to, right? More like a reaction. So kindly just click on it and let's give him a thumb up or a clap. Yes, 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 yes. It's not easy to have all these big four guys, Deloitte guys in the building, right? Sharing their knowledge, right? They paid billions to get their guys trained. So if you are lucky to have one to share that knowledge with you, trust me, they're sharing. It's not a local based knowledge, it's international, right? Okay, so thank you for that. Thank you for that. Thank you so much. Thank you. Thank you. Now, let's jump straight to what we'll be doing today. Let's take a look at our learning points, right? And as I rightly said, we might not be recording the live session, so which means we want your attention 100% because you are going to apply it. To be more of hands-on activity, trust me on that. So things we'll be discussing today: understand the structure of a financial statement as a modeler, and also remember this bootcamp assume you have basic knowledge of modeling. Yes, trust me on that. So we are just eating it straight, right? So understanding structure of a financial statement as a modeler, as an analyst, the way modeler and analysts, we see a financial statement is different from the way an accountant or an auditor will say the financial statement. So we take a look at the best way for you to understand this, because that's the whole thing about modeling. You are forecasting financial statements. I know you will be you have this question: what's the difference between financial model, forecast, right, and budgeting? Delamo mentioned that. So while we're having our training session, I will always like us to have a jotter where you can write things down. So note that point. At the end of this, our model, right? Just remind me that, Victor, you mentioned this. What makes it different? And I'm quite sure by the time we start building the model, I'm going to let you know those what makes them different, right? Everything, they're just a subset of financial model itself. So discuss structure of a financial statements, the way you need to understand it as a modeler. Then we discuss business cycle and accounting cycle. And it is this business and accounting cycle that forms our basis of getting assumptions needed to build a startup model. So they are all interrelated: your financial statements, your business cycle and accounting cycle, and how you use that to form your basis of getting your assumption. We'll be having a group activity where you go to the group and create a business case study. As I said, this will be hands-on. So we have some group activity and some interesting demos, right? So let's get started. Understanding structure of a financial statement and drivers. Before we even do that, let's review the components of a model. So when we say component of model, or when you hear component of anything, that means those things must be present before you call it this name. For example, if I'm asking you what are the components of a car, definitely you know that, oh, you must have your steering, your gear, right, your brake, your clutch, your engine, your bonnet, your boots, your four doors, and things like that. Which means you need to put them together before you call it this particular name, right? Quite sure you agree with me. Now, based on that understanding, can you just tell me one component of a model that you know? Before you call anything a model, what must it entail? So we'll be having, so this will be very, very interacting, and I would like you to make use of the chat more. So one is saying assumptions, inputs, right? I have experience, guys in the house. Inputs, processing, outputs, a guide tab, output. All right, all right, all right. So the first one is you must have inputs. Inputs are more like your raw data. They are more like your hard-coded value, your hard-coded variable. Oh, something will increase by 5%, which means that 5% is your input. Because of what? You can always change that 5% anytime. It is hard-coded. Then from there, we have what we call our calculations or our schedules. Someone call it processing, because this is your calculation. This is where you do all your magic, because your calculation connect to your input to do all those processing. This is your calculation, this plus this minus that. So our standard is saying, our first standard is saying, whenever you are building your model, anything related to input should always be in inputs and in only one worksheet. So we will be applying that by the time we're also building our model. Anything hard-coded should be in only one worksheet. You don't need to have revenue input, revenue assumption, cost assumption, financing assumption on different worksheets. No, our standard is saying everything should be in only one worksheet, right? Everything should be only one worksheet. Input, one worksheet. Calculation and schedule should also be in one worksheet, even though there are some exceptions to this. Some people prefer to have it on different worksheets. Well, they could, as I said, to every law, to every rule, to every law, at times there's always an exemption, but always keep the rule in mind. Then your calculation connect to your input, do the processing, and it feed it out to our output. Now, it is the output that determine the kind of model you are building. And basically, for our own financial model, the output is just three things. Our three financial statements, but only two is needed the most, because the third one can be gotten from the first one. So now, can you tell me the three the output of a financial model that you know? Let's type in the chat box. The output of a financial model. What must be the output before you call it a financial model? Okay, exactly. Thank you. So definitely you must have your profit or loss account, have your balance sheet. Now, the whole thing is, these are the two things that you need majorly. Because once you have these two, you can automatically get the third one, which is the cash flow statement. Right? Now, let's take a look at how to understand the structure of our profit or loss account. For some of us that attended my previous boot camp, or you've attended one of my presentation, I'm quite sure you'll be familiar with this. But some of us that we are new to it, let's run through it. We want to take a look at the structure of a profit or loss account, also known as income statement or statement of our comprehensive and other income. But for this, for the purpose of this, let's call it profit or loss account. Revenue is like the umbrella of every business or businesses. And everyone is eating from this revenue. Because what? Revenue is like the umbrella. Because if anything happens to revenue, your revenue flows down to your cash. So which means as much as possible, a business needs to keep generating revenue. And as such, you need to be able to define the revenue of a business because that's the umbrella. That's the whole thing. Either valuation or anything. Revenue is the start. Is it really the start? Well, when you take a look at our business cycle, I'm quite sure you'll be able to answer that. Revenue is like the umbrella because everyone eats from the revenue. And the first people that eat from this are people that without them, without incurring those costs on them, there's no way we can generate that revenue. And we call them cost of sales. Some call it direct cost or cost of goods sold. I think most time for our service related, for a fintech tech company, they usually call it direct cost, right? Because cost of sales, cost of goods sold sounds more like a manufacturing company. So also remember, revenue is the same thing as your sales, it's the same thing as your income. So they can be used interchangeably. So we deduct this, then we have our gross profits. As I said, revenue is like that umbrella. But in generating that revenue, there are some costs that if you don't incur them, you might not get that revenue. And that's why we have our cost of sales. And these guys are what we call top line item. Top line item. In fact, let me bring it close to our accounting, where we have that our ratio analysis when they are saying everything can be measured against your revenue. What is my gross profit margin? They'll tell us, they will say, oh, your gross profit divided by your revenue. What is our operating profit? Oh, your operating profit margin. Operating profit divided by your revenue. What is our net profit margin? Oh, net profit divided by revenue. What is my Ebitda margin? Ebitda line multiplied by what? By your revenue. Now, the school of thought is saying, if everything can be measured against revenue, what if we also try to measure everything against gross profit? On what basis? Because revenue, cost of sales, they are more like your exception. So to that school of thought, they are saying your gross profit is more like your real net revenue. Because this cost of sale, there's no way you can actually avoid it. So that's why our management accounting called their own gross profit contribution. Because it is after you've deducted this cost of sales from your revenue that you have this gross profit. Now, gross profit is what everyone is now eating from. It's no longer that revenue. As I said, remember, thinking like an analyst and financial modeler. So if you can measure everything against revenue, that school of thought is saying there should be a way you can also measure everything against gross profit. And that will tell you a whole lot of story. Maybe one of these days, or we might have some practical session on as you analyze. We take a company financials and we use that to tell that story. So gross profit, that's what everyone is eating from, and that's why we call it top line, and it's very important to every organization. Right? Your revenue can be increasing. Then they try to manage that cost of sales so that this gross profit margin is always large. That's why economics comes into play, saying some opportunity of cost, right? The more you produce, economic of scale, and all those things. The next people that eat from this is now your SG&A, selling general and admin expenses, also known as your operating costs. These are your monthly expenses, right? They are fixed. even though at times it's not as if they are really fixed, because as revenue increase, they also increase, but not the same rate at which revenue increase, which means revenue does not grow or does not increase in isolation. There's always a corresponding cost attached to it. You have your revenue. Our cost can be classified into two: variable cost and your fixed cost. Yes, every other thing being equal, right? So cost of sale is the same thing as your variable cost. So in our management accounting, they call it variable cost. And your SG&A, selling, general and admin, the same thing, operational expenses, is what they call your fixed cost, right? Next to it, then you deduct that from your gross profit. We have our EBITDA. And from your revenue down to your EBITDA, that is what we call core business operations. Now, your EBITDA is the true profit from your business, because revenue, cost of sale, which is variable cost, then there's no way you can put that out, because you need it to generate that revenue. Your fixed cost, which is your operating cost, these are the people that are supporting your business, your salary, paying rent, some subscription, some logistic, and all those things, your utility, everything comes under this operation cost, because you need it to keep supporting the business to generate that revenue, salaries. And these are the core business operation. And that's why we said in our corporate finance, they said the best value of a company is their EBITDA. Just pick the EBITDA value, multiply it by the EBITDA multiple, and that is good as a core value of a company, right? Now, the next one that comes into play is depreciation, amortization, right? Both of these are use of assets, and how different companies decide to treat their depreciation and amortization, they're very different. Remember, they are non-cash expenses, and it's not as if they are non-cash expenses. If you understand depreciation and amortization very well, you will realize that you are just expensing one huge expenses that you did a while ago. In year one, in year zero, let's say year zero or year one, you bought an asset worth 100 million. You charge it straight to your asset, right? Then that 100 million, you go to your cash flow. You recognize it as your cash flow from investing, negative. Then in subsequent year, because you've identified that already from your cash flow statement, you are now expensing that 100 million as if you are spending it yearly. And that's why you need to add it back to your cash flow, because you've already deducted that. We are not going into that. As I said, today is really not analysis section, right? So depreciation comes into, then you have your operating profit. Now, the next question that will come into play is this. We're saying EBITDA is a core business operation. So why are we now including depreciation and amortization, which are non-expense line item, before we have our operating profits? Anyone? Yes, let's share mind together. Let's rub mind together. See, EBITDA, we are saying everything there is core business operation, right? And here we are. I think that EBITDA is supposed to be the operating profit, because that's the core operation of the business. But why do we need to include depreciation and amortization before we now have operating profit? Anyone? Anyway, as I said, this will be more like, this will be an interactive session. Anyone? Just unmute your mic. Let's rub mind together. Okay, yes, Abdulaziz. Kindly go ahead, Abdulaziz.
Yeah, I was going to say that, I mean, why I would think that depreciation and amortization have to be subtracted to get operating profit is because, I mean, for you to make revenue, you have to buy assets, right, to produce if you are a manufacturing firm, right? So yes, essentially, you need these assets to be able to generate revenue.
Perfect. In fact, that is the answer. Okay, yes. Let me hear from someone else.
Good morning.
Yes, good morning.
Asset is actually an investment. So if it's an investment, you need to sell it off at one point or the other to make more revenue. So that goes back to the profits.
Hello.
Perfect. I love that. Okay, yes.
Hello, good morning.
Ibrahim, yes, good morning.
From my own end, asset is very key to the organization. That is why we have an issue that talks about asset turnover. That is talking about how effective the company use the asset to generate what revenue. Since that revenue is not linked to what will be reported at the end of the day, therefore there should be impact of that on the profit to be reported in terms of depreciation and amortization costs. These are the they are the expense that's related to the assets that we used to generate the revenue. Therefore, they should also have an impact on the revenue generated. That is why we are considering depreciation and amortization before we arrive at the operating point to show that we already considered the impact of the assets we use to generate the revenue.
I love that. Thank you so much. Thank you for that. Okay, yes, Michael.
All right. From my own view, there's a principle in accounts that talks about matching concept. Which says that every expense should be matched with the every revenue generated should be matched with the expenses incurred to realize that revenue. We're talking about operating profit. There's no way going to carry operation without utilizing both tangible and intangible assets. And there are some as a result of using those assets, the value of the asset would have dropped as a result of depreciation. So this depreciation amount is expected to be added to the expenses incurred during that operating period in order to generate the net profit or the net loss during that period. So that's just my own view.
I love that. I love that. Thank you so much. Okay, Razak, you want to let's have your own view.
Okay, good morning, everyone.
Yeah,
so my own view about it is that the depreciation actually represents the portion of the asset that we have used in generating the revenue. So, and if that depreciation is not also considered, it may also affect the decision of the users of that financial statement. Because if the depreciation is not being considered, automatically it means that the profits might actually be, might be increased, which may in one way or the other affect the decision of the users of that financial statement. So, which means it needs to be considered, and it will also assist us in providing cash for the replacement of such assets in the future. Thank you.
I love that. Thank you. Thank you. Okay. Yes, Ibrahim, let me hear from you before we continue.
Okay. For my own end, I think since depreciation and amortization, they are non-cash charges. So while others, cost of sales, SD and OPEX, they are cash charges. So for us to have the actual profit for the company, so we need to consider not only the cash charges, but we also consider the non-cash charges.
Perfect. I love that. I love that. I love that. I love that. Thank you for sharing that. Thank you for sharing that. Also, I have a comment here from Daniel. Ebitda measures more of cash. However, you need to consider the sunk cost already incurred in the use of the assets. And this brings us close to what we say. Revenue does not grow in isolation. To generate revenue, you need something, right? And I'm already preparing our mind to what we call cycle of a business, and how that applies. Now, you see a lot of people build model. You see them, the company, they have assets in year 0, and they have assets in year 1 in their cash flow statements, right? And you see the assets in their balance sheet will keep reducing, and by the 5th year, the asset value will become 0. It does not apply. It does not happen like that in a real business case, because there's no way your assets, that is what you are using to generate more revenue. So if you are saying, yes, I bought assets for 100 million and it will be depreciated over 5 years, it does not mean after 5 years your asset value will be 0, because the value of a business can be first seen in their assets. The book value of a company is the number. So when it comes to valuation, there are a lot of things. Number one, Ebitda is the value of your business on one other side. Secondly, your asset is the value of your business. So when you are doing your financial, when you are building your model and you're saying this company, because they've gotten this asset in year 0, which in year 1, right, over the 5 years, they will not invest in another assets, and in their balance sheet, the assets keep reducing, and their non-current asset becomes zero. It's as good as saying this company has no value. Because they have no assets to use and generate revenue. We'll be discussing more about that. So then your other incomes come into play. Finance income, right? And finance cost, your interest expense comes into play. And these are what we call our financing and investments, right? This deals with business decision, management decision, how you decide to run some other activities, right? You have your profit before tax. Tax coming into play, which is going straight to government. And then you have your profits after the year, right? So from our SG&A down to our profit for the year, these are what we call bottom line. Also, depreciation down to your tax expense, they deal with management decision. Your own, in fact, your own business can have different depreciation policy, and that's why you check most corporate organizations, you will see if you calculate their depreciation to their non-current assets, we hardly get that a year's straight line method of a thing. So most time they usually use rates. And that's what we are going to apply by the time we start to build our model. So we are incorporating that reality, because modeling is all about reality. So this deals with management decision, other income, finance. You could decide to be investing in other things. You could be financing your business with loan also. So this also gives room when you want to do comparison. Now, to you as a modeler and for a startup business, all you are thinking of is, number one, you have your input, your calculation, that component of your model, right? And you are thinking from the perspective of your output. That's where you start from. So bottom line is, yes, the same thing as your below the line. Yes. So, but okay, thank you for that. So when you hear below the line, bottom line is the same thing, right? Top line, above the line, that means from your gross profit upward. Below the line, SG&A down to your profit after tax, right? And now, as a modeler, you think from the output first. So there's something we call visualization of your model. So as a financial modeler, you're also a financial advisor. So you are saying, okay, you take a look at your three financial statements, which is the most important thing, because once you have that three financial statements, any other thing you want to do, you are picking your variable, your data from these three financial statements. You want to do your free cash flow statement, definitely you are picking it from these three. Your net present value, you are picking your data from these three, right? You want to do your payback period, your break-even period, your valuation, any type of valuation, you are picking your variable from these three financial statements. So you stand from that angle of that financial statement. As I said, you need only two, your profits and your balance sheet. Once you have that, you automatically have your cash flow, and every other thing, they are just their formulas. So you now go to each of these and ask, what are the components of revenue? Basically, you're asking, this business, how would they be generating revenue? You go to your cost of sales. What are the costs attached to this? So when it comes to startup, you break things down. You don't just say cost of sales will be the percent of your revenue. No, you must break everything down. What are the costs attached to them generating revenue? They can have multiple revenue streams. You go to your SG&A, you're asking, what will be their monthly expenses? What will be their salary schedule? How many staff will they start with, right? What will be the salary per month? You go to their rent, what will be their monthly rent? Because you are breaking everything down. Depreciation, you're asking, oh, what will be their assets? What will be the depreciation rates? The same thing, amortization. Do they have any other source of income? Finance income, do you think maybe their excess cash, they will put that in one bank deposit to generate some interest income? Are they going to be using loan? If they will be using loan, what are the loan information? What is the interest rate? What is the loan amount? The tax expense, what will be the tax rate? Will they have profit before tax? So you are now thinking from the driver perspective, and that was what will guide you to what to get your necessary input. Now let me show us this. The same thing. You're saying revenue. This business, how will you be generating revenue? They can have multiple revenue streams. But the whole thing is, what will be the price? What will be the price? What will be the quantity? What will be the growth? Simply you are putting, what will be the source of their revenue? How will they be generating revenue? What will be the components? Oh, maybe we'll be giving loan out to people and be charging interest expense. So which means your price is that interest expense they are charging, and the quantity will be the total loan they are giving out. So you're manufacturing, what will be the price per each unit? How many units do we expect them to sell, to produce and sell at this particular period, right? Going forward, what will be the respective growth for each of this year going forward? So that's how you are thinking. You are visualizing it and you are asking your clients, oh, this business that you want to start, how will you be generating revenue? Oh, okay, yeah, we just have a platform, all right? And when people register on the platform, we charge them this also percent of a thing, right? When there's a transaction on the platform, on each transaction, we get this also percent. And that's how you are thinking, right? From that, your financial statement output. So you're now asking, oh, I will be generating your revenue. So you know that, okay, to calculate my revenue, this will be multiplied by this. So going forward, this will increase by this. How many users do you expect to have on your platform, right? How many average transaction do you expect each of these clients to be able to perform on your platform, right? And what are you charging? What are your charges on this? And that's what makes your revenue, right? You go to your cost of sale, you're asking, what are the costs attached to this? That this cost you must incur it. For example, your hosting, right? Maybe there's some registration, there's some processing fee, and all those kind of things. That's what you are asking, right? Customer acquisition cost. If you don't market to get more customers, definitely you might not generate revenue. So those are the kind of things you are thinking through. Your gross profit, you go to your SG&A, you're asking them, what will be your monthly expenses? Oh, what will be your salary? You have that schedule, right? What will be your rent monthly payment, right? What will also be your utility bills, average utility bills expected monthly, your subscription, your marketing, all those expenses. You have your Ebitda, you go straight to their depreciation and you're asking, okay, if you are raising 100 million, how much of it are you going to use to acquire assets, right? Your non-current assets. And then you are now asking, okay, this asset, what will be the lifespan of the assets? If you're not using lifespan, what will be the depreciation rate? Definitely, your lifespan is, we also give you that, your rate. So you need that asset. Amortization, you're asking, what are the intangible assets? Oh, we have a website, we have this, we have that, we have that, we have that, we have that, right? So you are just thinking to forecast my profit or loss account. You're asking for each of these line items, what do I need? What do I need? Right? You go to other income in case they have some other source of income, you include it. Your finance income, you're saying, okay, what will be the rate on cash deposit? Let's assume they are not going to leave cash idle, they'll be depositing it in some fixed deposits. You go to their finance, you're asking, okay, your source of funding, are you making use of loans? If yes, what is the loan amount, right? What is the rate, your interest rate as well? What is the lifespan of the loan? And you go to your tax, you are saying, oh, do they have profit after tax? Will there be profit before tax? Then what is the tax rate? And that is how you think about this. So you visualize from the perspective of your output. You look at the structure of your profit or loss account. You are asking, what do I need to get this line item? What do I need to get this line item? What do I need to get this line item? And that's what will form your basis. That's what will form your basis of doing what? Of getting these assumptions. Now, to the part of the balance sheet, let's look at the balance sheet. Balance sheet can be categorized into two: assets, then funding. And that funding is categorized into two: your equity and your liabilities. Both of them, the what? On the other part, your assets are things owned by the business, resources of the business. It belongs to the business. You have control on it. And to the funding, these are the things owned by the business to outsiders. Because the business is different, what is a separate entity on its own. So if someone has given you 100 naira into your business, that means that person is expecting something in return, and as such, that business is owing that person. Someone supply you a product, you are yet to pay them. That means at that time they are funding your business has this obligation to do what? To give them a settlement. To asset resources of the business, how you've used the funds that you've gotten from this other part. So source of funding can come in form of credit, in form of loan, in form of cash commitment. which means that equity and liability, every line item you see there, they are funding your assets. And that's the best way for you to understand that. Your non-current liability, your distributor, you go and meet them. Hey, please give me this your product on credit and I'll pay you at this so period. As at that time, they are funding your business, because if they fail to give you their product on credit, is either you need to go to your equity or your loan guys to give you that money. But if they are funding it, that means what? The business has obligation to settle them back in return. Assets internal to the business, right? And also funding external to the business. Now, for the balance sheet, right? Categorize that into 5: non-current assets, current assets, equity, non-current liability, and your current liabilities. Now, all you are doing is you are trying to get a driver. How is my balance sheet linked to my profit or loss account? What are the line items that links them together? And how do I get each of those line items in my balance sheet as well? So that will guide you to getting those assumptions. For the balance sheet, on the non-current assets, we are saying you need your non-current assets, your property, plant, and equipment. How will you get that? Definitely, if they are saying we want to raise 100 million, you're asking them, that 100 million, how do you plan to use it? Oh, maybe we are going to buy a computer of so amount, build up our website and our platform, so amount, right? Acquire these assets, so amount. So those amounts that can be capitalized are what will make your element of your property, plant, and equipment that will come here. Any line, anything that you can charge your depreciation on. You can also have your land, right? Just saying this, we are raising 100 million. What are the expenses that we cover? So any of those expenses line item that can be capitalized, those are the things that will form your element of your property, plant, and equipment that comes to your non-current assets. To the one, and in case you have some other related as well, inventory. For say that is a company that has product and they are selling stuff like that, definitely you are saying your inventory. So we usually assume we apply our operating working capital concept here. We are saying inventory, where can that line item be found in my profit or loss account? Definitely it is inside your cost of sale, because it's inside your cost of sale that you have your opening stock, purchases, right? Units sold, and your closing stock. So your inventory is the same thing as your closing stock. So which means there's a link between them. And that's why you can say, okay, my inventory, let's assume any stock that we have in our store, any stock that we have in our store, we must sell it within maybe 30 days period or 60 days period. That will form that element of you getting your inventory value in your balance sheet. If you can break your inventory down, where you have access to all those information, yes, you can factor that in as well. So that means you are really going granular. But most times, we usually use that our operating working capital formula. So, say inventory date maybe 30 days divided by 365 multiplied by your cost of sales. So you are saying any stock that we have in our store, we should be able to sell it out within 30 days, maybe 60 days. The same thing applies to your trade receivables, which means anyone that we've sold to must pay us within this stipulated period. So you're not saying, oh, my trade receivable days divided by 365 multiplied by your revenue. That will give you that value in your balance sheet. Prepayment as well, some expenses that you've paid them before they are due. One a good example is your rent. You prepay your rent, so which means we can sell that. So any obligation that we have, we must settle it maybe 30 days before they are due. There are some expenses that are prepaid. For example, your subscriptions, your insurance. You can say, okay, any payment that we have will be prepaid. Let's assume like 30 days before they are due. Right, then you have other related things. You go to your equity as well, and you're asking, oh, what is the source of funding to this business? Do we have investors? Do you have owners' contributions? So everything that's what will form your own share capital. There isn't 100 million. That means under 100 million is your what? Is your equity value. There isn't 50 million. That is your equity value. It comes in here straight. So it just like you saying, oh, they are buying each share is worth maybe £1 or $1 per each share, and everything comes in here directly. So you don't have to don't try to spend a lot of time trying to see which one will be share capital. Maybe there are 1 million shares and all those things. Then they are not public, so don't waste your time on that. Investment contribution. If they say, oh, we raised 100 million through equity financing, just bring it here as whole like that. Then you have your retained earnings, which will be coming from your calculation. Your non-current liability, you are saying, oh, part of their source of funding, are they making use of loans? So you build your loan schedule to have that balance here. So the current liability, trade payables, factor of your cost of sales, following the same concept of our operating working capital. Trade payables, any of our suppliers, we should be able to pay them within a stipulated period and use that same formula of our operating working capital. The same thing, your accruals, right? For which is more like driver to our operating cost, and then we have other related costs. Now, do you have any question before we go straight into the next concept? Okay, yes, Benga, can you go ahead?
Yes, thank you very much, Victor. Can you hear me?
Yes.
Yeah, thank you. I just want to take us a step or two backwards when you were trying to explain to us the components of the income statement, where you asked us to give our contribution as to why we need depreciation and amortization before arriving at the operating profit.
Okay.
I just wanted to have your view, because we participants gave our view, but you didn't give your view based on our lecturer, our teacher, why analysts would consider those two, depreciation and amortization, in the income statement.
Okay, I think you might have missed that out, but I'm still going to discuss it again in this our next concept. Yes, I'm going to reshare. I'm going to discuss it against our new concept.
Okay.
Yes, I actually pointed out about that's fine. Okay, yes, Abraham.
Yeah, my question is for inventory. How do you measure inventory for a fintech company or say a service company? What will our inventory?
All right, thank you for that. So that's a very good question. I think I ought to have mentioned that. As I said, this is just a structure, and you are thinking from that. Oh, this is a structure of balance sheets. These are everything that I need to forecast this line item in the balance sheet, profit or loss account. It does not mean all the line items are applicable to all businesses. For tech service related, definitely there's nothing like inventory. So it's not a must that everything must be applied. For example, in our profit or loss accounts, for a company that is not using loan as a source of funding, which is maybe they are just using only the equity, definitely you don't need interest expense. You don't need interest expense in your profit or loss account, and you don't need non-current liability in your balance sheet as well. So it's not as if it's a must, it must be applicable to all businesses, right? If they are not using it, don't add it, right? Finance income, if there's really no information on maybe they will be depositing or some other income, don't include it, just remove it and focus on the core line items that are applicable to them, right? So are we good before we go straight to the next one? Now, business cycle and accounting cycle. Let me even ask you, when you hear business cycle and accounting cycle, okay, let's take the first one, business cycle. What comes to your mind? You can type in the chat box. When you hear business cycle, what first comes to your mind? What do you think business cycle is saying? You can just type in the chat, but when you hear business cycle, just simple term, what do you think business cycle is saying? Process that the business goes through to generate revenue. I love that. Fumi says stages. Life cycle. Okay, you're using a definition in the definition. Right? Business cycle, life cycle. Okay. I love that. The different stages of a business. I agree with you. Okay. So when we hear business cycle, Now, irrespective of the kind of business you do, irrespective of the industry, there must be something we call business and accounting cycle. It exists irrespective of anything, irrespective of the type of business you do, your industry, type of product, anything, either service related, business cycle exists. Now, let me ask you. So now I want you to start thinking as a modeler that want to build a model for a startup business. Let's assume you want to start a business today. What do you think will be the first thing that you will need to do? You want to start a business today. You have a business concept in mind today. What do you think will be the first thing that you will do? Or the first thing that you will need to do? To assume you have a business concept in mind today. What will be the first thing that you will do? Research and development, understand the market, find customers. So please, let's remember, contribution is very important. Market research. You want to start a business today. What's the first thing? A business plan. Perfect. We're all correct, right? So you are doing a business plan, market research, right? To find the viability. Is there a market? So which means you are considering your market an economic factor. Is there a market for this, my business? You need to do a research, right? To be sure, more like a visibility study at first. And this comes with your business plan. So as a financial modeler, it's not necessary you know how to write a business plan 100%. But it is always good you have at least 50% knowledge of business plan. They said you're not just a financial modeler, you're also a financial advisor. So your business plan and your financial figures must speak to each other. So first thing is you do your market research, you do your economic factor, consider some things, visibility study. Now you are sure that yes, this business, I can go ahead with it. Then the next thing that comes into place, how do you get your financing, your source of financing this business or project? Because you've done your research, you are sure that, okay, yes, there's a market for this, and I think this business is viable. So the next thing is I want to get financing. So financing and investment. And in getting this financing and investment, that is where your financial model comes into play. Because your financing, right? People that want to give you fund, that want to commit, even if it's your own personal money that you want to commit, you need to still be able to measure the viability of that your market, your business plan, your visibility study, how it match with the figures, because it's all about number, it's all about cash. Right? So you want to go and meet investors, they're saying, okay, what's the viability of your business? What is the expected return on investment? What do you think would be your margin? What do you think would be this? What will be your expansion plan? Everything, you've highlighted it in your markets and your visibility study. But your values, your figure also need to speak to it. So which means it does not move in isolation. In your business plan cannot be saying, maybe when you're analyzing your pest analysis, your SWOT and all those related things, you are saying, oh, in your growth plan, you're saying, okay, in year 5, we believe we should be able to acquire our customer acquisition supposed to increase by 10%. Then in your own financial model, your financial model is saying 50%. Definitely, they are way off. It's all about cycle. So from this financing, you've gotten your funding and everything. After that, what do you think will be next? After you've gotten your financing and investments, what do you think will be the next thing? You've gotten your financing now. What do you think will be the next thing in this cycle? Begin operation? No, I don't agree. No, I'm not sure. I'm not sure. You've gotten your financing and investment. What do you think will be the next thing? Cost structure? Is related. You're getting close. What do you think will be the next thing? If you've gotten your funding and everything, what do you think will be the next thing? Buy capex, acquisition, of course, how to utilize the money. Thank you. And that is where the business cycle now starts from. And you need operating assets. Now, remember, operating assets, asset is asset. Asset is asset. Assets could either be non-current or a current asset. Now, as you're thinking about this business cycle, also, I want you to be thinking about your financial statement, which is your income and your balance sheet and be picking those line items from there. For example, your financing and investment is this supposed to give you like different 3 line items in our four different line items in our income statement and balance sheet. Can you name it for us so that we understand that this is how we think about a startup? There's no magic to it. From only your financing and investment, I'm saying you can get 4 line items. I think 2 in your, I think 1 in your profit or loss account, and like 3, is it 3? In your, yes, 3 in your balance sheet. Okay, thank you. So interest cost is coming in. Exactly. So if they're using loan, they're using mixture of equity and debt. Definitely you are seeing that already, right? You're seeing their equity, which will go to more like their share capital. Depreciation, I don't agree with that. You're also seeing your liability. They're making use of your loan. You're seeing their non-current liability. You're thinking about, you're already seeing their interest expense already in their income statement, right? Perfect. That's how to think about it. So from there, you then go straight to your, yes, you're also seeing your cash. Thank you. Because you are now going to your cash flow statement. You are seeing your cash flow from financing. You're also seeing your retained earnings, because your retained earnings is coming in a little bit. Because dividends, your equity investors, you need to pay them dividends. So you're also seeing your retained earnings as well. Perfect. I love that we are understanding this. Now, operating assets, assets could be anything. Non-current or current. Asset is assets, anytime, any day. Your inventory could be your own operating asset. Your cash can also be your own operating asset, your working cash. Inventory could be your own PPE, could be your own intangible asset, your software, your platform, and everything. Right? Land could be your own operating. So operating asset can be anything. And capex. And basically, what you are saying is this financing and investment that we've gotten, how do we plan to use it? And from here, you're already seeing your non-current assets, right? You're also seeing what? You're also seeing your depreciation, because these are operating assets. You are seeing your working cash. Now, someone mentioned working capital, which is the next thing that comes into play. As I remember, that it's not about the figures alone. It's way beyond that. You're also a financial advisor. It must flow. So now, most people, when they say, okay, we are requesting 400 million, they forget to include what we call working capital, working cash elements. Because if you've gotten your assets, you've gotten everything, right? You made provision, but remember, you have some prepaid expenses you need to incur. It's not immediately you start the business that you start generating revenue, which means you need to employ people to start working for you. You need to start marketing, putting your, and you are during that period, you need cash to be working. You need that working cash. So always remember to include working cash in your use of funds. You see how we do that when we get to the practical aspect of it. Then after that, incur everything. That's when you can now start generating your revenue, manage your costs. Right? So your working capital, you're seeing your working cash that you need to be running the business. Then your revenue, your cost. Then you say, oh, what are the components that will be generating your revenue? You're going to your income statement, which is usually your revenue, cost, and you have your profit. So how will you be generating revenue? What are the costs attached to this you generating revenue? Right? What are your operating costs, your your monthly expenses? Everything is coming in here. And from there, you have your profit. You generate your profit, you have your cash. Now, remember, profit is not the same thing as a cash. A business can be profitable and cash deficit. A business can be profitable, have cash deficits. A business can be making losses and have a good cash turn. There are a lot of things around that part. We are not going there this session. But as a modeler, you should remember, yes, a business can be making a profit concurrently for the first 3 years of their business operation. But the most important thing is cash, because cash is king. Because once cash is off, there's nothing you are doing anymore. And this concepts of profit and cash have actually killed a lot of businesses. And to the valuation analysts, guys, we really don't care. Is accountant cared about revenue and profit, but do you know what finance is more? Do you know what is more important to finance? Anyone? What do you think is more important to finance? Oh, okay, ego. Okay, all right. So it is actually that cash. Everything is all about cash. Every discussion, the live story. Hey, we want to do this, we are going to do that. The strategy, all the strategy is still all about money. And it is that cash and return. That is the two most important thing to finance. Those are the things that form your element of valuation. Cash and returns. See, NPV, that's the value of your business on its own. Your internal rate of return, that's the return on its own. Your ROI, that's the return. My free cash flow, that's a value of a business on its own. Your terminal value is a value. Your EBITDA is more related to your cash. So as a model, those are the things you need to understand, because you are advising. It's not about you just building model and just leave it there. You take a step further. That's why I want you to understand this concept before we jump into the practical aspect of it. You need cash. Now, that cash is not always idle. And that's why you need to invest it back in your operating assets. And that's why when we said operating profit and EBITDA, because you need operating asset. It is what you will use in generating revenue. And it's more like your core business operation, your operating assets. That is what you use. So operating assets can be anything to anything. For a manufacturing firm, definitely you know that it is that their inventory and the factory that they are using in doing production. So oil and gas, it is their plant and equipment and their reserves. To a bank, financing, right? Financial institution, it is the loan, because the more loan they give out, the more revenue they will generate. So operating assets could be anything to anything. For our tech company, which is the value now is coming more in their software, their platform, because if you have a platform that can host 100 users, that means your revenue is limited to that 100 users. If you have a platform that can host 10,000 users, definitely the value is not the same thing. The revenue will never be the same thing. So that's the operating assets. The more they use it, the more users that platform can take, the more revenue they can generate. The more transaction, the more revenue stream they have, the more revenue that will lead to this cash that form that basis of valuation. So as a modeler, this is how you think about it. Now, how do we incorporate this into our own financial model? Do you have any question? Do you have any question? Is it making sense? Is it making sense? If you're enjoying it, let me see your thumbs up. So you can use your two thumbs, right? Well, I think there's one, right? Is it making sense? Is it making sense? Are you getting the whole concept, right? These are the things that is very difficult for you to see on any online courses, right? And the best way to learn from people, to learn anything, is to learn from people that are doing it, right? I'm just, you can see that I'm just entering here and there, here and there, here and there. Yeah, yes, so this is what we call business cycle. Now, for the accounting cycle, basically, accounting cycle is where do you record this, 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 which will take us back to that you understanding your line item in your financial statement and how you get each of the line item. Operating assets, definitely you know that will be in your accountants will record that in their balance sheet. So operating assets, this is what I'm getting from them. Financing investments, this is what I'm getting in my line item. It's also going to your balance sheet. Some will go to your profit or loss account. Working capital, definitely you know that that's your element of your cash flow and your what? And your balance sheet, more like your balance sheet element. Revenue and cost, profit or loss account. Your profit, we also be seen in your profit or loss account. Your cash, that's your cash flow statement that will also end up in your balance sheet. So that's the whole thing about accounting cycle. They're just telling us how we record this business cycle. And that's it. How do you now factor this into your modeling? That's what we want you to understand, right? Cash is king. So the more they use this cash, they invest it more in the operating asset again to increase it. Go back to your working capital, right? Have some cash till you start generating enough revenue to sustain the business. Generate as much revenue as possible. Manage your cost to have a good profit stand, and you have your cash. How do you now incorporate it into a model? You have your business model, business plan, done your research, understand the business canvas. So which means you understand, oh, this is what this business want to do. You need to understand that very well. It's not about all the values. This is what your businesses want to do. Okay, I understand the business model. The next thing is you now need to get some general and macro assumption, which you would have gotten why you are doing your visibility study, your business plan. Now let's discuss this. What are the general things that you know can affect a business as a whole? Let's talk about the general one first. General things that you know can affect a business as a whole. Let's type that in the chat box. Irrespective of the business. No. I say general. I'm not. No. We are not. Let's leave macro first. We are not going to macro. Let's leave macro for now. General things that apply to any business, irrespective of the type of, irrespective of where you are in the world. Government policy. Thank you for that. Competition. The general. Okay. Well. Competition. I think that would have gotten that in your business. Staffing. Okay. Let me give us example. Let me give us example of general assumption. So when we talk about general assumption, irrespective of where you are, act of God, yes. Time period. Thank you. Now you are understanding what I'm saying. So number one is this: your business can never run more than 24 hours a day, right? Your business can never run more than 12 months calendar. So which is more like period. Apply to every business. Global pandemic, some other things apply as a whole. So timing is more of general things. Your business cannot, at least the normal working seven working days in a week, irrespective of anything. Some government policy. So now most of us, we are now mentioning that macroeconomic assumption. So you are saying, oh, inflation, time value of money. I'm saying if I'll be spending 100 naira today, definitely that 100 naira will not be worth the same thing tomorrow, because of inflation effect. My pricing, right? If I'm selling 100 naira today, yes, inflation might increase, but there might not be the same corresponding effect on my price, but at least my price too should have that effect, right? Interest rates, governments, some different macro related things as well. Exchange rates, yes, for a company that's getting fund overseas and all those things, your credits, those different macro related things that can affect business. You need to consider that at first. Then after that, you go straight to your financing assumption. What's the source of funding? If you are getting loan, if you are getting this, if you are getting equity, what is the percent offering? Right? Is that what's the percent offering of the business, or what is the dividend payout ratio? If it is loan, you're saying what will be the long-term, what will be the loan amount, right? What will be the loan period payment? What will be the interest rate as well? We go straight to your capex and use of fund. The money that we've gotten, how do we plan to use it? Oh, we do our business registration, we get some assets, we incur, we'll get our software, some platform, our websites, right? Get some equipment, some office furnitures and all those things, our laptop. Finish from there. Or what would be some prepaid marketing? Definitely, you need to create awareness, put your marketing in the use of your fund. Your working cash, what are the prepaid expenses? You prepaid your rent, your insurance, some related working cash that you need. Maybe you need to make provision for your first 6 months monthly expenses as your working cash. So irrespective of anything that happens, you know that at the 6 months you have that cash to burn before the business will start generating its own. So working capital and your operational cost. Then your revenue now comes in. After that, your cost, how you manage your cost efficiently. Then after that, that is when you now have your calculation and your output coming into play. So remember this flow. So in case you can take a screenshot, you can use your phone, use it to snap this or you screenshot it. You'll be using it to do our next activity. So number one, understand the business model, the business canvas. What is this business? What is it all about? Number one, identify general assumptions. So 30 days, 30 days in a month, right? 12 months in a period, right? 7 weeks in 7 days in a week. As well, understand that. Go to your macro and say, okay, we need inflation so that we have effects on our cost. We need our price inflation. We need our some growth factor. Okay, Oluwatobi, do you have a question? Okay, so you need your economic factor. You need some economic factor, right? Maybe how do you think our customer growth and all those things you need to consider that as well. How do you plan to get funding? So are we using mixture of loan and equity, or we are using only equity? Get that. How do we plan to use the funding? Right? What will be the provision for our operating cost, our monthly expenses? So in our working capital, in our working cash, we are saying, okay, maybe the first 3 months, the first 6 months, we are making provisions for that. Then revenue, how do we plan to generate revenue? What are the necessary costs? Direct costs, your operational cost. Then calculation and output analysis is what we now do together and run you through how to build that. So remember, we are building everything month on month. So with this, you need it to do your group activities, right? We have a breakout session. Now, with this understanding, I'm quite sure you already have that knowledge on how to get your accurate assumptions. But now, how do you relate with your clients whenever please help us be the model for the startup? And you don't expect your clients to know all this. Most times, even your clients, they are not finance, they don't know anything about finance, basically, right? And you need to get your data, because the first accurate source of data you can get is from your clients themselves, the owner of the business. You need to be able to pet them. That's what I use, right? You need to be able to pet them. Try to it's not as if a force, but let them see the reason to be able to give you this. So don't try to do the hard work part, because like if you can get your assumption perfectly, you are more like 50% done with your model. Try and cajole them to be able to give you those assumptions to get that your profit or loss account and balance sheet mostly, right? Remember this cycle. And now how do you use that, getting that assumption? So which means you need to be able to, so most times they also don't think about it, because they are focusing on strategy, this, and most of them, they usually forget that part of finance, which is also important. So which means you need to be able to give them something that can guide them. And by the time they are feeling it, they're also thinking through their model. Because, well, a startup model is so crazy. Because if you don't try and get your first assumption from your client, you are going to have a problem. And that problem can make you unprofessional, and also as if you don't know anything. I'm talking from experience. I've been able to work on over 150 financial modeling projects, and most of them are startups. That's my own major. Yes, I build corporate and project finance as well, but I focus more, especially at least my own area of focus is more of startup. And I've worked with a lot of white guys and also Nigerians, my country, right? Look up. So, and I know that experience. So, one, try to make sure you get your assumptions from your client. And that comes with you know what are the things you need to build that model. As I said, profit or loss account, balance sheet, or the line item, try and get it. But you need to create something that will guide them. So you don't just tell them, oh, give me this, give me this. No, you need to create it in such a way that, okay, they can read through and be able to still give you. Now, there will be some cases where the owner does not have any information as well. So which means you might need to take a step further, doing some research of related companies, or using your normal does it make sense approach, right? For say, oh, I don't have, I'm not sure. Yes, I really don't know how many staff that we need now, or the salary we paying them monthly. That's one problem. That means you need to go, okay, let's say a typical business like this, what do you think? So as a modeler, you need to be versatile. For a business, let's say you want to start a restaurant. It's okay, for a restaurant, what's the average number of job position that you need? So you list this, you list that. But that you need to let your clients know that, okay, you know what, I'm going to build a draft model. And that's where you need your fast standard to come into play, such that the clients can always go ahead to your inputs and update them, because it's when they see the value that they will now start questioning as if you are one magic guy. It's all about future. You cannot be 100% accurate. So you need to let them know, okay, you know what, I will build I will do a research, try to get some values, but structure your model such a way that they can always update the model, so that you don't have to go through doing double work. So with this, let's kindly go ahead. I sent a mail to us with 2 attachments. The first one is the Excel file, so that we all have one same model template. Then the second one is this Word document. Let's kindly go ahead and let's open it. So this is a sample of what you can send to your clients. So I've also dropped it in the chat box. It's a Word document. So you can send something like this to your clients to help you get those data. As I said, remember, this is the whole thing. This is the whole thing, your cycle. You're trying to see each line item. What do I need? What do I need? So kindly go ahead, open the file. So immediately you have it open, I'd like you to come back to our Zoom and click on your hand to, or best that type, open in the chat box. So we are going into our different group activity. It's about different group activities. So I haven't seen it yet. A mail was sent to everyone. Yes. So check your mail, download the attachment, or if you can see it here as well, you can also go ahead and open it. Okay, all right, great. Now, so you can come back to my screen and let's take a look at this. So you can be creative with your own. This is not, I'm not saying this is a benchmark standard for anything. All you just need to do is make sure you simplify your stuff to be able to get those data from your clients and make it interesting by creating it. So you can decide to put your own Excel. Just be creative. This is not a one-way thing. That's one thing I love about finance. Finance is so flexible. So now, see this, understanding your financing. And the first question is, how much investment do you want to raise? Which question do you think this is answering in this our cycle? What do you think? The first question. So definitely, this is what is this first question asking for? Financing and need. Exactly. So how much investment do you want to raise? Number one, you need to know, if they are raising 100 million, you just type your 100 million. If it is dollar or naira, that's what you want to see from your clients, right? Now, do you have previous investment in the business? This is always common because of what? Remember that our cycle. Right? We expect them to have done some business model, some business research, right? Let me show us this other one. You expect them to have done some market and some economic facts. In fact, some would have gone ahead to have some sample products. So you also need to capture that in the model. So that is what this is helping you to get. What are the previous investments and what were they used for, right? The next thing is, what is the planning fund? And this to help you know the kind of source of fund they will be using. Is it bank loan? Is it personal contribution or equity? So that you know, okay, maybe they'll be using equity. So some could be only equity, they will fill it there for you. Some will be only personal finance. So this will also let you know that, share capital. Some, they might not even have only any share capital. Maybe they are using only bank loans. So you know that, there's nothing like equity part. Okay, there will be equity part. Maybe it should be only retained earnings, right? Or only loan. They're not using loan, they're using mixture of both. So you can have different sorts of financing. You can have convertible loans. So now that one we are taking it advanced. We are not covering that here, right? Maybe you're saying, okay, shareholders loan, convertible loans, debenture, all those kind of things. That's what you want to try and get here. If it is loan, how many years to pay back? So this one, you're automatically calculating, you're having your repayments that will go to your cash flow statement. And what is the interest rate? Definitely you're having your rate. And you're also having your loan balance that will go to your non-current liability in your balance sheet. If equity, what percent of the profit sharing are you offering? And what is the investor's expected return? So you know that this one, you are getting your dividends that will link to your retained earnings. Give a breakdown on how the company plan to use the fund. Then here, this is what you are getting. You're trying to get your operating assets and the capex and your working cash. That's all you are trying to get here. Then about the business operations, give a brief description of your business operation and the business model. Let us understand your business, which means you want to get the whole concept. This business, what is it all about first? After that, you now need to ask them, can you please list your product or services and their respective prices? You need to let them know. This is very important. You need to think through it. If you're going to have 5 revenue stream, let's know. You're going to have 5 products. They need to list everything and the pricing, because there's no way you can, yes, you can still get some like companies, right, online to get information, this kind of business and this, but the best information is there. Please list the cost attached to each product or services listed above. They need to be able to provide you this. And that means them too, they've also done their own first part, which is this markets and economic factor research. You need this so you know that you are seeing your cost of sale, you are seeing your revenue already. List your customer base and expected customer growth expected for the forecast period. You need this. It's all about customer base or quantity. You'll be selling 1,000 units this period. Oh, we expect to have this so you base users. Out of this base user, we expect to have the percent to be active users. The subscription base, we expect so those are the kind of things you need here into your model. What is your plan for staffing? That is, how many personnel are you willing to you starting with? And what will be their salary payment per staff? You need that salary schedule. Then you go ahead and say, oh, can you list out your expenses, the expenses you anticipate incurring monthly and their respective amounts, such as, oh, what will be our utilities be monthly, average monthly? The salary, you get that from your salary schedule, your rent, the software, internet subscription, office supplies, all those related things. Now, to also help you, you can ask them if they have any rough projection. Maybe they've done one rough calculation somewhere that they can share with you. That would be great. Also, if you are doing a valuation for a startup, you can ask them, do you have any expectation value of your business? Every valuation is biased. So to guide you is always to hear from them. How much do you think this your business will worth? So if you are discussing with the client, I'm saying, oh, my business is worth 5 million. My business is worth 2 million. My business is worth 1 million. Oh, you are requesting for 100 million. What is the value of your business? Oh, my business is worth so amount, so value. So you need to hear that from them, because that will guide you to see, okay, if your client is saying my business will worth $5 million and you're building your own model is saying the business will be worth $10 million, know that something is up somewhere. Or the business will worth 2 million. That time, that's when your own advisory comes into play. Okay, let's stay realistic. You're saying your business is worth 5 million. These are the components, because everything in this cycle is linked to this cash. Right? Can you see this? Can you see this? So now, with this, and you can please include any other information that will help with more clarification about the business operation and funding. So in case you cannot provide answer, you can tell them to some of the above questions. We can do some industry and market research to obtain. So if you are doing these other parts, you need to let the client know, oh, I'm going to build a sample model, a draft model to send to you so that we can both review it together, because it is most times is when they start seeing the number that their own mind will now be booting to oh, okay, no, I think this will be our service, this will be this will be at times. Yes, you can have some clients like that will tell you, I cannot feel this. They believe you are in magic, but always point that out to avoid story that touch at long run. So because there'll be a lot of questioning. Where did you get this value from? Where did you do this? Where did you do this? So you need to clarify that. So we'll be going straight to our group activity now, right? As I said, this will be more of hands-on activity. Now that you understand the whole basic thing of getting that assumption, you now need to go as a group activity. I'm going to create a breakout session randomly. So you go into your breakout session as a team. Now, you will agree. So I don't want to impose one type of any business model on us. So I will divide it into, let's say, 5 groups. I think 5 is even too much, right? Let's say 4. 4 is 4, okay? Okay, let's work with 3 groups, right? 3 groups. So you will go into the breakout session. You will agree on a tech business model operations, any type of tech business. Any type of tech business, right? Number 1, using that our business cycle, and also filling out everything on this brief questionnaire to get your data. You will use this. You will fill it as a group. You will agree on any business concept. So I want you to deliberate. I think with 3 groups be okay. Or let's make it 4. Let's make it 4 so that we have option. So you will fill that your business concept, you fill it in this questionnaire with the necessary information. So you can do this as a group. Then maybe after the session, you can also work on it on your own. Most times it's not always easy to fill. Yes, so that you have that experience and you understand how you need to just schedule the clients to be able to get that. So you fill that in the questionnaire. Then you will need to now assign a presenter to present and discuss your tech business model with us. After the presentation, we will now agree on which group business model concept that we will be using as a case study for this our bootcamp. We could have decided to just give us one case study as a business startup of a thing, but no, we want you to have that practical experience of it. As I said, you learn it more when you get to do it yourself. Now, again, you need to go into your breakout session, agree on any tech business model operation. It could be fintech, could be edutech, could be just any tech, as long as it's tech related. Fill the questionnaire. So you can agree with yourself, try to deliberate. Okay, you know what? Let's work with this. Let's work with this. Let's work with this. It applies to everyone. Now you fill the questionnaire with the necessary information to build the model, having that picture of profit or loss account and this. Assign a presenter to present and discuss your tech business model with us. So you can have 2 or 3 presenters where you present together, right? Then we now agree together by the time we are back after we've seen the presentation on which group business model concept we'll be using. So yeah, I'm still going to activate our breakout session. So I want to make it so practical, right? By the time I'm running us through this training, we'll be doing a lot of mistakes that I know you will also be doing. So this is not a pre-recorded training, right? This is not a pre-recorded courses. So we do mistake, almost every mistake that I know you can make while building your model. We also do it so that you see that this is practical. It's not as if we are doing a cram case study for you. We'll all be doing this together. So I'm going to activate our breakout room, and I think we'll just give us, like, let me see. I think 15 minutes should be good. 15 minutes should be good. All right. What do you think? 15 minutes should be good. 15 minutes. 15 minutes. So we're going to have 4 groups. 4 groups, 4 groups, 4 groups, 4 groups. And remember, go into your breakout session, agree on a tech business model operations, fill the questionnaire with necessary information needed to build the model. So someone can decide to share their screen so that you have only one file being filled, right, in your group. Remember, assign a presenter to present and discuss. So 2 or 3 more persons can decide to run us through your business model and what you filled, and we now then agree on which group business model concept we'll be using. So make it robust as much as possible. Yes, please. So we're starting the breakout session. Are we good? Are we good? Any question, any clarification before we start the breakout room? Please make sure you participate, right? That's the best way to learn. Deliberate, argue. In fact, maybe at least let me make it 20 minutes. Yes, bring different concepts, any tech concept. Then now agree as a team. Okay, you know what? Let's work with this concept. I think it's robust and it makes sense. Can get almost everything we want. Then you go to the finance, you go to your questionnaire and say, okay, you know what, let's make the funding both equity and loan. So let's keep that so that you understand that. So by the time you are building your own, maybe the business has only loan, you know that you know how to do the loan equity. So just make it combination of bank loan, personal contribution, equity. So right, so make it robust as much as possible. Are we good? Are we good? Are we good? We'll be starting the breakout session now. Any question? Any question? Do we all understand what we need to do? Okay, all right, so I'm starting the breakout session now. So see you in the next 20 minutes. Remember, assign a presenter, fill that the investment questionnaire. So please, we've created the breakout session. So in case you are yet to join any breakout session, remember to accept. I think you see something like accept being displayed on your screen.
For such, in the sense that okay, we can aggregate the funder, those that make the fund available. We can
So you are saying
also
fintech that usually give out loans, yeah?
something like that, something like that, something like that. We just provide
Okay.
a platform for the lender and borrower.
guide us through.
Okay, so for the number 2, do you have previous mistakes? That would be new because we're starting from scratch.
So remember, you can also share your screen as well, so you guys are seeing it together. You can share your screen, and you have the right to share your screen.
Please, we don't have the rights yet. Okay, beautiful.
Okay. I think
Thanks.
that's
Now I can share it now. Thanks.
all right. Okay.
There is a hands no from.
Please remember, you can also share your screen. I think I've granted that permission now, so you can share your screen so that you can have a look at what you are doing together.
Okay.
All right, Victor. So from what I can see, okay, do you want to use the raise of hand feature or
persons that are not pleased their votes? Yeah, let's advise those to please their vote, please.
Please remember, you can also share your screen. I've granted us the permission so that you all can see what you are doing together. All right. So well done, everyone.
All right, thank you.
Yes.
Our staff.
All right.
The commission.
Well done, everyone. Please, I've granted us permission so that you can share your screen and you all can have a glance at what you are doing at the same time.
Okay. Can anyone share his or her screen?
I'll do that from my hand.
All right, go ahead. Go ahead. I'm using my mobile. I've not converted to my system.
All right. Welcome back from the break. Welcome back, everyone. Welcome back. Yes. Please, let's kindly signify if you're also back from the breakouts. If you're back from the breakouts. Okay. All right. So let's kindly click on the 1, 2, so that I'm sure we are all back to the main session. The breakout session is over, and I believe you're able to get something done. Right. Okay, so now what we're going to do is we have like 10 minutes break. Let's have a 10-minute break so that we can get to cool down our brain, right? Then when we come back, we just go straight to our presentation. We go straight to our presentation, right? Yeah, the time is not sufficient. Oh, sorry about that. Right. And if I had to add, I added another 5 minutes to it. So let's go for our 10 minutes break, and then when we come back, we then go straight to our next thing, which will be our presentation. So, all right, see you in the next 10 minutes. So please, in case you have any question, clarification regarding what we've treated so far, you can always go ahead and ask that during the breakout session. Once again, a very big thanks to everyone. Thank you so much for your commitment. All right. So I've actually been getting some messages on my my mailbox. All right. I think we were so clear on the instruction. When we send the first link, you were meant to use the link to register for the live session, right? As a modeler, giving attention to detail is very, very important. And that's one of the things we're also trying to get out from us. The first link was meant for you to register first, right? Then it's only people that were able to register that we sent the live session link. So I'm just getting mail, like I'm trying to access with the ID. The ID for registering is different from the live session, and that's how we are going to run it. Next session will definitely not be the same link and will not be the same ID. So giving attention to details is very, very important as a financial modeler. So sorry for some that missed out those are the criteria that we also need from everyone. When you get a mail, try to read through. Yes, vital informations might be lined somewhere there for us, right? So sorry for some people.
Hello?
Okay, yes.
Yeah, can we get the recording of the video? Because I don't think I would to like, it's difficult for me. I'd like to give something to review to actually understand it better. Because I know some parts of what we just talked with, like an hour, 30 minutes. I know that some things I've missed. If I have like the video, I can review it and really be better at it.
Okay, so I stated that at the start of the session that we are not recording and we are not sharing the recording of the session. So we need you being attentive 100%. There are some costs that comes with recording and sharing and all those things. So for now, we decide to just keep that out. So unless maybe you have a screen recorder on your own laptop that you can use, fine. You can do that at your own end.
Sorry, good afternoon.
Okay, yes, good afternoon.
So while we're having our break, can you take us back to our rooms? Because I think some of us are not done yet, so we can just make use of that time to just finish something up.
Oh, okay. Okay. I think I'm getting that message that the time was a little bit short as well. Okay.
Thank you very much.
The truth is, if you go back to the breakout session, because the breakout session was random, right? So we might not be able to get back, but as long as you have your at least I'm quite sure you're able to agree on your business idea and the tech business model. So that is enough. That is enough. You can all do the filling together as a team.
All right.
Yeah, I think so. Let's use that to cover up. All right, so welcome back from the break. Welcome back from the break. Welcome back from the break. So our breakout session activity, yes, the time seems to be a little bit short, right? I guess some of us we started late. Considering the time, we're also trying to work with time as well and to be able to achieve some things today. So we're just trying to find a better way for us to improvise so that we still get the same objective, right? The first objective is to make sure you understand how to fill that, and so that by the time you're sharing it with your clients, you also have the experience and what you expect and what you need, that thinking of a thing. So you know these are the things that I need, these are the things that I need. Also, maybe I should just call us randomly. Maybe some groups were able to get their own done, and let us know if you like us to work with your own fintech case study. Let us know. Anyone, any group. Now, just randomly. They like us to work with your own group case study. So this is random. Okay, group three. Okay, all right. So who's your spokesman? Who's your spokesman? So just a general discussion. Just let us know your business model concepts. Okay, maybe let's just hear from each group, right? Don't worry about the feeling. Just your spokesman, just unmute your mic and just let us know your business model. Just run us through. Yes, maybe just 10 seconds run through. Okay, yes, Benga. Let us know your group.
Okay, thank you very much, Victor. Can you hear me?
I can hear you clearly.
Lovely. Okay. So for group 3, the model is an e-commerce model where we intend to build an e-commerce business that will serve as an intermediary connection between sellers of products and the buyers, intending or interested buyers. That's the kind of business model we intend to run. We intend to charge commissions on all completed sales while advertising for each sellers, whatever products they intend to sell. So we would have a website where they would display their products on our website, and we will advertise for them on various other platforms where we'll charge commission and advert expenses per the ad that we do. And we'll charge commission, 7% commission on all completed sales, where each seller eventually gets a buyer for their product, and whatever the amount that the seller is paying, we'll charge a 7% commission on it. We intend to do deliveries within Lagos environs for 1,000 naira. Then any delivery that is outside Lagos environs, depending on the weight of the product, the minimum being 2,500 naira, I think, per anything that weighs 1 kg and below. That is the overview. I don't know if you would like me to add one or two things. Thank you.
That's perfect. I think I'm loving this, right? More like something of Jumia and co, right?
Correct.
Yes, okay.
Correct. I don't know if my colleague Abraham has one or two things to say.
At least for now, just the overview, and I think you've done justice to that. Perfect. I love that. So we have all right. So we already have one e-commerce, something like Jumia families of tech. Perfect. So platform where buyers and sellers can meet. Then we are charging commission. Other way we can generate our revenues, also advertising and also delivery. Perfect. Thank you. That's for group 3. All right. The next group. Anyone else? Anyone in the other groups? Okay. Yes. Promise.
Hi, Victor.
Yeah. What's your group?
Group 4. Hi, Victor. Okay. Good afternoon. Good afternoon, everyone. So, I and the team decided to develop a logistic business model. Business is going to be based strategically in Lagos. The idea is that we have a mobile app where people log in to move in items and any of their deliverables from one location to other. We are practically going to have ownership to vehicles and bikes, which are going to be like our assets. We are going to charge for our service delivery. We're going to charge service delivery costs as a major ways of having revenue. And another way of actually getting the best reach to customers is doing a whole lot of advertising and marketing. using social media and other ads as a way of generating revenue. So that's basically our major way of reaching our major product service delivery is going to be based on the items you are moving. If you want to use our vehicles, the charge is going to be different. If you're going to use our bikes, the charge is going to be different. And that is basically our business model. Not really got into the numbers specifically, but that's it. We are practically based in Lagos for now, and that's just the idea.
Okay, perfect. I love that. So what do we call that? You know, we already have e-commerce, e-logistic, right? Is that
Yes,
the term we use for that?
that's the term, perfect term.
Okay, e-logistic. So where we have a mobile app, and then our users can make their delivery requests either through bike or through vehicle, and we are charging them based on the delivery. And also another way is for us to have some advertising cost, right? So more like a mobile app. Okay, perfect. I love that. Thank you for that. So let's go straight to the next group.
Hello, Victor.
Okay.
Hello, Victor.
Okay, yes. Okay, let's
Yeah.
Daniel go first.
Okay.
So group.
Okay. Talking on behalf of Group 1.
All right.
And we have decided that we are going for e-health. Let me put it that way as well. So health tech business, where we have medical consultants meeting with registered patients from the comfort of their home, attending to their health needs and diagnosis. Another aspect of the revenue stream would be after the diagnostics and the consulting, we would also deliver drugs to them at the comfort of their home. So that's the overview of our business proposal.
I love that. I love that. This sounds so sweet. So e-health, right? Where we have a medical consultant, and I will be generating revenues. I will be charging a medical consultancy fee, some health and some diagnosis. Also, the drug provision, so which will come with them buying drugs, and also the drug delivery source of revenue. That's great. I love that. That sounds sweet. All right, so thank you for that. So to group two, what do you have for us? Group two. Let's have group two. So they said they spoke my Mikoyems. So group two, we're waiting for you. Can you share your concept with us?
Oh, okay, sorry. I
Okay.
thought someone was going to present. Okay, so it's just a simple business case where we providing a savings and credit platforms for standard and SMEs customers. And so we're going to be having a wallet feature, a transact feature where you can pay for your DSTV subscription, and then you can also invest on the platform. It's as simple as that.
Okay, so good. I love that. Straight to the point. So this is more like a fintech, and where you are providing loans and finance to SME businesses. Also, you could be able to make some provision on the platform, some subscription based, and also investments, right? Where you charge some commission and things like that on. All right, so great. We have different 4 tech businesses, right? E-commerce, e-logistic, e-health, and fintech. Now, which one would you like us to work on? We have e-commerce, e-logistic, e-health, and fintech. Which one would you like us? So I think let's do a vote. If you would like us to go with the e-commerce, yes. So the concept remains the same, right? But we just want us to have one as a basic so that you understand how to think about it. So no, let's do this one by one. If you go with e-tech, just click on your hand too. So I can count number of people that we have for e-tech. No, e-commerce. If you want e-commerce. E-commerce, okay, 1. So please click on your hand 2. You can only support 1. You can only support 1. Click on the hand 2 and leave it there so that I can count us. Okay, so we have 5 people. 6 now. So make sure you click on your hand 2. We have 8 on e-commerce. So we have 8 people. 9 now. We are closing it. For e-commerce, where we have a seller display what they are selling, then the buyer comes in and buy, then we are charging a commission from the parts of the sellers. Also on that platform, we have some advertising of a thing, and we also incorporate some delivery into that. All right, so we have 10, 10, 10, 10, 10. Thank you, thank you, thank you, thank you. So let's put our hand tool down. We have 10, 10, 10, 10, 10, 10. All right, so the next one, which is our e-logistics. E-logistics. So if you are in support of e-logistics,
please bring down my hand, Victor. Sorry.
Okay. All right. So let me bring it down again. All right. So now, for e-logistics, click on your hand tool. Click on your hand tool. Click on your hand tool. So you have your reaction where you can click on your hand tool. So we have 3 e-logistics. We have 4. So don't worry, the objective of this bootcamp is for you to be able to build any startup on your own, having this understanding of the same concept. Okay, so we have 5 for e-logistics. You must vote for one. Trust me, you must belong to one group. So we have e-logistics, just 5 people, just 5, just 5, just 5, just 5. Okay, so let me note that down. All right, so let me lower our hand. Let me lower our hands. Okay, thank you for that. Thank you, thank you. So the next one is e-health. Yes, so if you would like us to go with the e-health, just click on your hand tool. Click on your hand tool. We have 8. Use your hand tool. Let's use our hand tool. Let's use our hand tool. So we have 12 for e-health. Okay, now this is getting interesting. It's already topping our e-commerce. E-commerce was 10. Now we have 12 for our e-health. Okay, 13, 14 now. Okay, 16. You guys like e-health. Okay. You guys like tech. All right, so that's like how many? So we have 14. Okay, now 14 for our e-tech. Thank you, thank you, thank you. Let me lower all our hands. All right, thank you. So let's go for the fintech. If you are in support of fintech, just click on your hand too. Fintech. We have 10, we have 11, we have 13. Fintech. We have 13. Fintech. We have 14. We have 14 is going. We have 17 for fintech. Ha, okay. Fintech. We have 16. Okay, we have 17. 17. Okay, so I think we already have the winner. I think we already have the winner. So thank you. Let me put down our hand too. So fintech, they've taken over. Green. All right, so great. So from what we have now, we have fintech as our case study, right? Fintech, and what they'll be doing is they'll be giving loan out to people, right? They will also on their platform there will be subscription based, and also for people that want to invest, right? So let's put our mind together and let's work on one of these. So sorry for other guys, just your own case study, please put it somewhere, right? So maybe the subsequent boot camp, we can have people that we can always take it one after the other, and you can also build it on your own. The concept remains the same thing. So now let's put it here. What do we call the name of our fintech? What's the name? Anyone give us a name? Give us a name. Give us one.
Boot vest.
You said?
Boot vest.
Okay, so they said Boot Vest. Boot Vest Limited. Yes. This is looking great. So let's say this is our company name. So don't worry, I'm going to share this with us. Let's say this is our company name. Let's say location. Then our head office will be in Nigeria, right? And our currency will be in this will be in Naira for now, right? So there's a way you can build your model where you incorporate both, where you can have two currency. Okay, yes, I can hear you.
Please, I want to talk about something. Like, I'm based in Ibadan and we have not had lights for like a week now. So I'm just coming online because all my things are dead. So I really appreciate if it's not as if I'm not committed, but I really appreciate if you can get recordings, because it's very hard for me to like come online, like all my things are dead and it's not my fault.
Man, that's beyond my control, right? We have a policy, and we're kind of strict on that. All right, I quite understand your case. But also remember, not everyone in this boot camp is from Nigeria, so the thing is kind of general, and when we set it as such. I don't know yet, but let's hope maybe the admin guys will be able to do something at the back end. I'm just the facilitator. There are some guys that we are paying to help us manage and be the admin of this boot camp. So that the decision is really not my own, because we try as much as possible to stay strict to our stuff. Yes, sorry about that. Sorry about that for guys in Nigeria. As I said, remember, not everyone in this boot camp is from Nigeria, so that concept might not apply, and the concept of network and light. Yes, sorry, Nigerian guys. Sorry about that. But let's hope something will be done from the management. All right, so company name, they said we should call it Bootvest Limited, location Nigeria, and our currency will be Naira. Let's work with Nigeria. So how much investment do you think we need to raise? Now, fintech, how much investment do you think we need to raise? So let's put it in Naira as well. How much investment do you think we'll need? How much investment? Just give us some value, give us some values.
50 million Naira.
Okay, so we're having a lot of values. It's a fintech. Okay, so let's work with 100 million. I think 100 million should be fine for a start. 100 million. Okay, so don't worry. Let's put everything.
300 million Naira.
300 million. 300 million. Okay, let's work with 100 million. And the reason why it is called a model, right, and it's not a budget or a typical forecast, is because everything here is not static. So there's a way we are going to build a model, and at the end, I just finished building a model for a company, and the company wanted to raise around $2.5 million, right? And when I finished up building the model, did the investment valuation, the business valuation, and everything, the payback period, net present value, IRR. You know what I ended up telling those guys? That, you know what, don't raise $2 million. Don't put yourself in unnecessary pressure that does not exist, right? It's better you try and raise, maybe you start with $300,000 or $500,000 in series 1, then series 2, raise another one, get to year 3, raise another series. That will be better for you, because if not, if you want to raise this kind of huge amount of money at the start, it will be difficult for you or for this model to prove how viable this business will be within this stipulated period. Yes, there might be some investment whereas you might need like 10 years or 5 or above 5 years for the business to be viable, but at least for the purpose of the model, you need to be able to show a very good return within that 5 years period. Yes. So someone is like, Victor, how do you get the Naira symbol automatically? Sorry about that. That's some Excel efficiency thing. So I've programmed my own Excel, right? My Excel and my Word document. Let me see if it's still working. Okay, stop working. So in my Excel, if I type in my Excel, anytime I type anything like nghen, it automatically understand that I want a Naira sign like that. So in my Excel now, so if I type nghen, look at what happened. We just change it to automatically that Naira sign. So I've programmed my own Excel. You can also do that as well. Yes. I don't know why my Word document has stopped working. All right. So we have this. Do you have any previous investments in the business? If okay. Yes.
Sorry, if I just want to chip in on the question of how to get Naira sign. So on what document you can just do 20 aces of Alt X to give you the Naira sign.
Say that again.
20.
20.
No, 20.
20.
A6.
A6. Okay.
Alt X.
Alt
Alt X.
Alt X.
Yeah.
Okay. This okay. All right. This is a long journey, but that I think this is great. So I think this is more like a unique code. You have that in
He was talking
Excel as well.
about how to generate the Brown has a video on it on YouTube.
Okay. Okay. So I think so for that one, let me even remember. If you go to your Excel, because once you do it in any of the Word Office 365, it just automatically applies to others as well, right? I can't remember where I did that. So okay, this is it. Okay, now you guys are taking us away from what you need to do. This I think is more like a long journey. So if you go to your file under your option tab, you will see this guy called proofing. So if you click on the proof, you see these autocorrect options. So under this autocorrect option, that's where you can get it done. Right? Yeah, all these auto and someone might not remember again. So where is that my own? So you can just come here and type ngn, right? And then maybe you can copy from somewhere. So let me show you. Let me delete it so that I can do it again. So this is how I did my own. First thing, you go to your insert under your symbol, get your symbol of Naira. So I think this is my own Naira. I can insert, close it. So I can copy it. Control C, right? Then go to my file, go to my options under this proofing, right? And I'll click on this autocorrect options. So here I'll put replace ngn and replace it with that Naira sign. So which means anytime I type ngn in any of my Office 365, it will automatically return this Naira sign, and I'll click on add, then click on OK. Okay. So if I come here and I type ngn, it automatically turns that to this. And I think the same thing is supposed to work inside Word documents. I don't know why it has stopped working. Can be funny at times, right? So those are your proofing autocorrect options. So ngn, I can just put that Naira sign, add, and click on my OK. So whenever I type ngn, it just automatically turn it to Naira. So I think that one is way faster than the code. Right? I'm not good at
Thanks.
cramming. Yeah, I'm not good at cramming. That 20 out 6, I might forget, right? All right. So I think this is better. What do you guys think? So just automatically type anything you need Naira, just an ngn, and it just turn that Naira sign. So you can do that. Maybe there are some things you repeatedly put in your stuff, your Word document or Excel. You can also create it and just have this. All right. So do you have any previous investment in the business? For this one, let's put no. No, right? What is the funding plan? So what do you think we should have for our funding plan? So definitely, I want us to have both loan and equity. So how much do you think we should get from our loan?
70%.
Someone said 70-30. So loan should be 70, right? While the equity is 30%. Is that what we are saying? Do we agree to that?
I think we should make it 30-70.
Okay, so loan should loan be 30 or equity?
The loan should be 30%.
Okay, loan. So they said loan should be 30%, right? And our equity should be what? Should be 70%. So let's be more explicit. So which means this will be 30 million. 30 million. Why this is 70 million? 17 million. All right. Yeah, I'm also thinking about that. Since it's a startup, they have that capacity of getting higher loan, but loan and the startup, there are a lot of things around that. These have killed so many business owners, right? You don't want to start stressing the business at the start when you've actually not gotten the stand of the business, right? Because these guys, irrespective of anything that happen, you are paying them their interest expense, your liability repayment and all those things. But this equity, these guys, you just show them your financials and they still understand everything, and you have that rule when we are making profits, when this is this, when that is that. So it's easy to at least, but loan will definitely stress the business out at the start, not when you've not gotten your stand. So if loan, how much, how many years? So for the loan, so let's say let's say 5 years. Let's put that as 5 years, right? 5 years. And what is the rate? Okay, yes, I'm with you.
In respect of the mixture,
okay,
realistically, since is what you do on daily basis, you are bringing reality to it. What is obtainable in the real life?
Yes.
In terms of the ratio between loan and equity, what is obtainable in real life?
Okay, so as I've said, it's not about what is obtainable in the real market, right? It's your business. It is your strategy that you've put in place. So most times we don't use this percent of a thing. The whole thing is about discussion, and that's why you are building this model. This is, as I said, this is not static. We can always update this by the time we are done with the model and we are analyzing the model. So it's not, the model does not end where you build the model, you have the value and everything ends there. No, it is flexible. Your model must be flexible to incorporate those changes. So by the time we take a look at it and we are seeing that based on what we have, maybe it will take us like it will take us 3 years before we can penetrate the market and have a good stand position. Definitely, I'm not sure you want to consider loan. Whereas you see that you're already stressing the business cash out already. So for this, let's just keep it like this. By the time we are done with the model, that's when we know that maybe we don't even need to consider any loan. It is a business that we think the cash will be having a lot of cash and everything. We might decide to consider more loans, but that's why it is called a model, and it's different from forecast and budget. Everything we are putting here, they are not static. The fact that a client is saying, I will get 25 million from loan and equity, you are meant to advise them. By the time you are done with the model you present, they are saying it. You're telling them, you see now, if you get this loan, you are stressing your cash because you need to pay this particular each amount in your principal repayment in your cash flow statements. So imagine you are going through equity. Your equity, we understand based on what you've signed that, okay, yes, you are making losses. So at this time, everything is pending. And you have that money to still use and run the business till you get out of that losses and start balancing things. The truth is, most startup businesses, at times it takes them 4 or 5 years, to be able to find that balance. So if you've made mistake in your year one, entering into some funny covenant with your investors and the whole thing, your ability to sustain through that period now becomes difficult. You see business saying, yeah, we generate 1 million in this year. It's always not like that. Yes, I build model for startup and also startup that have been in existence. That's one is another approach on its own. So business that is a startup been in operation for 3 years or 4 years and they want to raise new loans. Most of them are always at a negative cash stand. That's the truth. So for the rates, let's assume not known yet, right? Because definitely maybe they are yet to approach the bank to be sure of what the rate will be. But you as a modeler, you need something to be able to build your model. How do we get that? If equity, what percentage of the profit sharing? So let's say for our profit sharing, right? So let's say our profit sharing. What do you think that would be? What can we use? What can we use? What can we use? What can we use for our profit sharing ratio? 20%. Okay, so let's say 20% at start, right? Then let's say other years, maybe we increase it to 40% in year maybe in year 4 and 5, at least for the business then. So give a breakdown on how the company plans to use the funds to be raised. So now let's list those line items that we need. Let's assume you want to start a typical fintech. Let's give a breakdown of those costs, those expenses that you can have under them. Now everyone's contribution is needed. Fintech guys, this 100 million that we want to raise, what are we using this for? So let's all right. So let's think about it. Let's follow that process. Let's have a sequence, right? I think that would be better. So first thing that you need is registration. You need your registration and licensing. So that's how I want you to think. So it's all about story. So think about, you want to tell a story, right? So think, let's put this, let's have this. So think as if you want to tell a story. That's the way to build a model. So first thing, A business license, how much do you think that will cost us in our own current? Okay, so registration, let's say some legal, okay, let's separate it. So registration and licensing, how much do you think that will cost us? At least common sense. For typical business registration in my own country, how much? I think let's say 200K should be able to wrap that up, right? 200K. So some professional and legal fees. Like how much are we looking at for that one?
Like one name.
One name. One name. Okay. One name. Well, that could be, but for this, let's work with 500K. 500K. So people to do the business plan, the legal guys. Adewale, you're trying to talk, but I cannot hear you. Sorry. Look at your network is acting funny. You can type in the chat box as well. Right? So professional fees and legal, let's say 250. Then after that, what else? So I think professional and all this research and everything will come under these professional fees. License and permits, 1 million. So I think let's put that license and registration together. Okay, so someone is asking, what kind of license is fintech are we looking at? Yes, let's have a discussion around that. We need to be certain. You have a lot of different licenses, right? So what provision can we make for that? Anyone familiar with fintech that can guide us? We have CBN, we have CAC. I'm questioning.
We have PTSP.
So can you just give us a range of what you think that at least registering and getting the license will be? At least let's be realistic a little bit. Payment service and all those things, right? Platform. I said 20 million naira. Okay, it's just a startup. I think that would be way too.
Yes, now if you are getting microfinance license from CBN,
no, let's leave microfinance at okay. There you definitely need, because that's what they are doing. They are giving loans
yes,
out
that's
as
the
well.
license that they have. That's the license that most fintech operate.
So that's like 20 million. So let me ask Oluwadara, that 20 million, do we capitalize it or we expense it in year one?
We can't expense it in year one. I think we should capitalize.
We should capitalize it.
Just my opinion. I think we should capitalize it.
Yeah, because that's way too huge, right?
Yeah, but cannot be amortizing it on yearly basis.
Okay, all right. So if that's the case, I think that 20 million can now make sense now if you are capitalizing it. Okay, all right.
So why will you want to capitalize it? Is the licensing covering a period of time, or it's a one-off? It's an initial license to start operation.
There's still renewal. There's renewal on annual basis. It's one-off.
That's the question. Is it a one-off thing, or we are going to be paying it annually?
We have one-off. We also have renewal on yearly basis.
Okay.
This should be one-off.
Okay, all right. Okay, so let's.
The way I understand it is that once you pay that money for the license, it's just a deposit. So the day you don't want that license again, you write a letter and you take your money back. It's a deposit.
Oh, interesting. I get to know more
if
about.
Someone else is if you don't want that business again and someone else is taking over the license from you, you can sell that license at the same value.
Okay.
Yeah.
So, but at least for this one, let's assume our business is at least we don't expect to sell it or everything. We just a continuous business operation for now. So the registration should be 20M, all right, one off. Then we can now have the annual licensing that they will be paying, right? So we know that one will be coming in our operating expenses, right? Okay. So what other things? Thank you for that insight. Those are the things you need to know about industry before you jump into building the model. So let's go to the software and application development. So like average, how much are we looking at for this? So for our guys that know more about this, like average, how much do you think to build a software and application? So software, let's call it our software, more like our platform. right? So, okay. So how much do you think we are looking at here? 10 million? Will 10 million be okay? Okay, someone has even created, okay, I hope it's not as, Mr. Benga, so I hope it's not as if you copied it from online. Is it your own estimation so that we are sure? Or from your group?
Yes, no, it's my estimation. It's
Okay,
not,
okay, okay. Okay, all right. Thank you for that. Good. I love that. So I think for this software and platform, so let's work with 10 million first. As I said, we can always update this, right? Always remember that. So software, what are the things that we need as well? You might need some laptop, right? Laptop, and so okay, let's just call this some
Laptops,
hardwares.
actually.
Yes, hardwares. Is it hardware or hardwares? Okay, I think it's hardware. All right. So like how much are we looking at for this? So to get that, what is the average at least for our hardware? Like how much should we make provision of around 5 million? Because those guys, they need some heavy hardware to be able to run these guys. Is 5 million okay? Or is too much? What do you think? Okay, let's work with 5 million. 5 million. I think 5 million is fine. Then what other things? So our furnitures and fittings. So furnitures and fittings. So like how much can we make for our furnitures and fittings? 3 MacBook is 5 million. Okay. So this is a start. I'm not sure they want to start with something huge as that. Yes, we can still start with our
Let's use HP for
HP. Yes, let's start with HP.
This is enough.
I think let's start with HP. Or Dell, exactly. I think Dell, or highest in ThinkPad. Yes. All right. So, so for our furnitures and fittings, how much are we looking at? But the guys can't work with HP. That's another thing, sure. But at least let's just for now, we can always update it. Remember that. Furnitures and fittings. Let's look at, let's say, with 3 million be okay. But at least for now, 3 million. Then which other things do we need? Yeah. Do we need any other thing? Do we need any other thing? Any other thing? So next, let's go straight to our marketing. Marketing and awareness. So plant and equipment. So I think everything can come under our generator, everything can still come under our furnitures and fitting. So if that's the case, let's put it as 4 million. Yes. So marketing and awareness. How much are we looking at for our marketing and awareness? For marketing, definitely this will be huge as well. 1 million is too small. Marketing alone. Marketing. How much are we looking at for our marketing? So I think Benga did not consider marketing in his own, right?
Yeah,
So
I was
marketing.
looking at office space. You need an office space.
Yeah, we are coming to that. Yes.
We can be
So,
working remotely now. So people are just starting.
now you're thinking like a good startup. So don't worry, all those things are what we take a look at later. So all right. So let's say our awareness, marketing and awareness of a thing, some PRO and all the rest, some partnership as well, right? Just publication, right? Publicity. So awareness, let's put publicity here. So we have publicity. So publicity. Everything, let's just make provision of 15 million. Then let's look at some of our prepaid expenses. Prepaid expenses. No one will give you loan without a physical office building. You definitely need physical building. Yes, it's not necessary, but at least you must have the office space. There's a difference between office space and the normal way, but at least you must have office space. Yes, where people can come into and everything, so that they will not assume you are doing Yahoo. You know, so you definitely need that office space. Okay, so for our prepaid expenses, definitely we need our rent, either rent or lease. But I think let's just work with rent. So let's say average of 5 million annually, right? Now, yes, okay. Now, Chinedu is saying, fintech doesn't seem that it will make profits. So now there are a lot of reality, and that's why I really want people that I teach modeling. I try as much as possible to let them let them know that it's not about the value, it's way beyond the values. It needs to make sense, right? The whole thing is most times it's all about that scaling, that growth that we give you. So maybe as year 1, year 2, year 3, it's all about struggling, unless you have someone that is really financing the business, that believe in the business. I think there's this big company, right? That they let I think the man was telling us the story of his business that for like the first 10 years, the business was making some crazy losses. But he had some investors that were just funding because he already showed them that for this business to be profitable, to be more maybe after 15 years. So it's maybe after 15 years that they can start. Now the business is what, trust me, it's one of the most valuable top 10 business in the company, right? So you need to understand Uber, all those things. So people just believe I enter to start up today, I'm making my profit tomorrow. Someone will be the model. Yes, it's normal for them to think as such, but you are the modeler. You need to really help them. So rent 5 million. They need insurance. Let's say insurance of 2M, or let's just say 1M for now. So which other thing? So they also need their working cash. So they need some working cash. Okay, no, why is that coming up? Okay, so let me just put it here. We are going to adjust everything in our model. Then we need our working cash, right? Is there other name we can use for it? Right? So provision, should we just call it provision for cash? For cash. So this one will be for the loan. This one will be for the loan. Then we need our own provision, provision for cash, which will be more like our operational expenses, operating costs for a start. Do you understand this? Do you understand this? So this is the way you would like your client to feel this. But most time, if you are lucky, you can get this for those that have done their plan very well. But if not, you might need to do some extra work. But before doing that extra work, make it known to them that, see, I'm not a magician. It's either we agree that, see this, I will build a sample, put in some fictitious assumption like this. Then with that, you need to build your model to be very flexible so that they can update that. And that's part of what we'll be doing. So give a description of your business operation. We said we'll be giving what? Loans. Okay, not there. So providing loans to SME businesses, right? Some subscription. Yes, there will be assignments. Yes, there will be assignments. Subscription based subscription service on the platform. And then which other one? Then people can invest. Okay, investments. All right. So the next one is, okay, this is almost 2 o'clock. The time is really moving fast, right? So please provide your products, services, and respect. So let's just fill this out. Then we close the session for today. Yes. So provide your service. So we are saying loans to SME. So what will be our commission charge? What will be our commission charge on loans provided? Is that? Hello?
22% per annum.
Man, that's high. That's huge.
That's where we are right now. That's actually where the commercial banks are right now.
Small now, beg.
They are dealing with SMEs.
Except you want to do something like 1.5% flat.
Okay. I think that would be fine. Right? What do you think? 5% per month? What do you think? Should we just work with 1.5% flat? 22% is decent. But do you think any SME will want to go into that? 5%.
For microfinance, the minimum you can get is 5% in the market. Unless you are going to commercial bank.
Okay, I think I love that. 5% per month.
That is monthly flat. That 36%.
Monthly, yes, monthly flat. That's what you can get for microfinance.
That's
because they don't take collateral.
Without collateral.
Yes.
Okay, so all right, so let's also remember this part, right? The savings and investment plan of people, right? People savings and investment plan, that is also what we form part of the loan of it. Okay, yes, yeah, I understand that part, right? So okay, are we including savings into it? Are we including savings into our operations? Let's clarify that first. Is it a full-blown fintech, or we just want to focus only on giving loans, not people saving? Do you want that?
I think it's much better when you have
People can
both.
save.
When you have savings.
Yes, when you
and
have both.
investment.
Okay,
Yes.
so perfect. So savings or savings from people. Let's have that first. And another
Let's say
problem.
customer deposit or
Okay,
something.
okay, okay. I think that will be fine. Customer deposit. I think that sounds better. Customer deposit. So more like savings. Right. So we have that. So what are they getting on their own savings? I'm quite sure they need
It used
something.
to be 6% if you are doing 6 months.
Let's assume
It's
per annum.
6% per annum.
Let's discuss the annual one. The annual one.
That is too low.
6%.
I can equally get that from commercial banks.
Commercial banks, yeah. So I think you should have something higher.
For a fintech, let's do 10.
Okay, well, let's do 10% per annum. Per annum. Then loans to SME. What will be the interest rate? The rate? What do you think will be the rate?
These ones go as high as 20-25%.
Yeah, so
Depending on the riskiness.
yeah. So yes, they are saying 22%, right? That's one is let's assume. Should we work with 1.5% flat per month?
That's 18% per annum.
Yeah, at least we need something to we need
That
something
is
to entice.
for fintech, that is not sustainable. And I will explain the reason.
Okay.
For the fintech for fintech, you agree with me that they also go to commercial bank for loan. That for capital they use for loans. So they need to have a spread. They need to have spread over what they got from the bank. Coupled with the fact that the accessibility also and the risk involved, because they don't take collateral like normal commercial bank.
Yes.
So and the what do we call it? The default rate is high, and they take cognizance of all those things. So that's why the less you can get is 5% per month.
Okay.
For microfinance.
So let's say 5% per month, right? So I think this is fine. So which other thing? So for all these subscription-based subscription, people paying subscription, do you want us to? I think we should make that free, or I think we charge some commission on that, right? People that want to do subscriptions. But this one thing I like to encourage when you are building a model and for business owner, that it's better we focused on the core revenue that we can 100%, at least we can close to 80% have a reasonable forecast on. Because number one, the other one is subscription. So let's assume, okay, maybe anybody that is paying their subscription through our platform. Let's say maybe we are charging 1% flat on the subscription they are doing, right? So let's just keep that, let everything being equal. Let's have that for now. Then which other one? They're saying investments. So can anyone give us how do you think they'll be generating revenue from these investments?
Is the spread on what they get from loans and then what they get from deposits, what they pay on deposits. So if they have a product that says investment, that people are investing with the firm, what are they paying on those investments and what are they getting? Maybe by lending to pension, by lending to banks now, for instance.
Okay. So more like a management fee, right?
Yeah.
Management. Okay. So someone has given us. So let's say something like facility fee of 1.5. Let's say 1.5% on the loan on the investment facility that we have on our platform, right? So I think that could just kind of balance up things. So the difference between what they've got and what they are giving out. Okay. So as I said, you can go as granular as you want, but remember, focus on the core thing. If the assumption is really not making sense, don't include it, right? Remember, it's not reality itself. It's just we trying to what model and picture what will be. So now let's list the cost attached to each of these products. So for our customer deposits, 10% per annum loans. So what are the costs? What are the costs? What are the costs that we can have for our fintech? Apologies, we are
the rates that you pay on the deposit.
Okay, so deposits,
Interest cost or stuff.
Okay, more like interest cost. Okay, yes, I agree with you. So what do you promise there? Let's rub mine. I want us to do this together. Yeah, I don't want to be giving us all the information. So you need the understanding of the industry first, not about just building the model. So what are the costs that you think will be attached to this?
Is that not, sorry, Victor, is that not the customer deposit that we call savings up there?
We already have this, yes. Yeah, let's rub mine together. I don't want to be giving us this. Number one, definitely we need our processing fee. Our processing fee. So I think the processing fee is around what? Anyone have idea on the processing fee? I think our processing institution, they are really eating us much, right? Okay, 2%. 2% fine or 1.5%. Either ways, we can always update this, right? What other costs? What other costs? What other costs? What other costs? What other costs?
What about the cost that the fintech will pay to commercial banks where they go to also borrow from the commercial banks? Is it?
Okay, so this now you are thinking like how a modeler should think, right? And also the startup. Now, customer deposits. We said we are giving them 10% per annum on the money they deposit with us. Is this actually a revenue to us or a cost?
A cost.
Cost. That's why I refer to it. That's a cost.
It's a cost.
Perfect.
Hello, Victor.
Okay, yes. Daniel.
Please, for the customer deposit, the way the model often go is that they would have a savings plan, just like a platform like CarryWise.
Yes.
It's from that plan, the money they get, they also invest it or give it out as loan to their own customer.
Yes.
Now, the cost to them is the 10% per annum,
yes.
While the returns to them is the spread between the amount we got from the loan we gave out
and
the costs we paid to the people that gave us these savings.
Perfect. So which means this guy and this guy, the way it's being done, right, is we are saying, okay, the cash we get from this customer deposits, which we are giving them 10% per annum, and then we have our own loan that we are giving out, which we are charging 5. So by the time we multiply this 5 by 12, then it is that difference that becomes our own income. So we call it interest income from these guys. So I think we already have that. The subscription base, I'm not sure there's any cost attached to this except for our processing fee. Investment facility fee of 1.5. What do you think will be the costs attributable to this? So I want us to also let's share mine together. Also our hosting, I think they have a name they call it, right? Hosting, because the platform you are using, definitely you need to be incurring some fees, right, to maintain it. Hosting, web, AWS. Okay, what is AWS? Can you give us the full meaning? Right? Anyone, our fintech guys, right? Amazon Web Service, so hosting some web service related, right? And I think they pay this monthly, right? More like a cloud and the other thing. Okay.
It's in US dollars.
And it's always in US dollar, exactly. So let's I think what's the average amount they usually pay? You can always go online to check that. Then also more like your domain. Perfect, thank you. So and your domain. And I think as much if you want to have I think it's more like a subscription base. So if you want to move from one to another, there's a one that you can have like 1 million, can host 1 million. There's another one that can host 10 million and all those kind of things with your cloud as well. So what's the average? At least for now, let's just put, let's say maybe 1.5. I think that's too much. What's the average? What's the average? Let's talk. Let's hear from our guys, our fintech guys. Our fintech guys. 5,000. Is that not too much? So I think it's based. So as maybe as you are expanding, then the cost will now keep increasing. Yeah, I think that's the way. But for now, let's just put this like that. Yes. So okay, now that's the next thing. So sorry, we are taking our additional time. I'm quite sure you are enjoying this, right? So list your customer base and expected customer growth for the forecast period. So now this is our users. So let's say our base users. So let's just have some assumption there. Our base users. We need our base users that we have on the platform, because that's the most important thing. So let's say for a start, what is the average user that we can have a month base?
50.
Okay, let's say we start up. Is that 50 not too high? But at least we can still update that in the model. So let's say we have 50. 50. Let's start with. I think that 50 user would be better. Okay, let's make it 100. 100. Remember, this is a month. The first month. We are saying we are starting today. At least average of okay, maybe we should use on. I think 100 is fine. Let's work with 100, right? Then what is our monthly growth? Our monthly growth for this now. Let's just put this unknown. Yeah, I'm going to share this with us, definitely. Yes. So this month, then from this our total users, let's get our active users. So there's a difference between base users, and then there's a difference between your active users. So active users, right? What do we need? Our active users, let's just say maybe our active users would be active users. Let's say at least for a start, let's call this 20%. 20% of our base users. About base users. What other things do we need? So I'm still going to show us how you structure this into your inputs. All right, and that kind of makes sense and allow your users to be able to update it. Then we need our churn rate. What's the average? Let's say our churn rate for the start to be around something like 20% as well. Right. So the other thing is average transaction. So transaction, average savings, or let's call it average transaction per users, so per month. So which means how much average amount do you expect? What is churn, please? So churn rate means in this month, let's assume you have a new users of 100, right? So you are going to create that schedule. So your beginning users, you have your acquired users, then your churn users means let's assume you start with 100 users, then maybe you lost 20% of that users. Okay, I'm not let's assume this we are going to lose like 20% of that user that we started with, right? So that will now to have your ending users will be your beginning users plus the new user that you acquired, then minus the user that you think you might not come back again to transact on your platform. So that's what we call that churn rate. Yes. So average users, average transaction, or let's say average savings per user per month. Average, how much can we have? What is the average amount you expect someone to be able to save on that platform? Contribution. Our fintech guys, fintech, your contribution, 5K. Is that not too small? What do you think? Average savings per users in a month. Okay, these people like 5K. What do you think? Is 5K okay? What do you think? 25K seems to be high.
Thank you.
Okay, yes. So I think I would like, let's go with that 10K. So remember, we can always update this. So that's, then let's say average times someone save in a month, average times you save in a month. So maybe let's just say 1 times. Just put that as 1 time. So we call it 1x, right? So this is how to think as a modeler. Okay, yes, this Joseph, you have a question? So then what is our average saving? Okay, hello, Joseph. I cannot hear you. You can type in the chat box. No, I cannot hear you.
Can you hear me now?
Okay, yeah, perfect.
All right. So this average transaction or savings per user is what I'm trying to go back to what the plan is. So we said we are giving loans to SME. So by SME, so we are looking at registered business, right?
Yes.
Okay, so if you are looking at registered business, so this average transaction or loans per user, and okay, no, I mean this savings per user per month or something. So are we looking at businesses saving? We are trying to limit it to individuals now.
So
remember,
remember, we are saying it is the money. Yes, we make provision for some cash, but we also remember that we are saying people can also save on our platform, and it is this money that they save that form an investment instrument that we give out to this our SME. So that's the typical way a bank operates. So a bank, you're saying the money you and I will deposit is the bank in a bank is what the bank will take and give out to loan to people. So they now tell us that, okay, on your own money that you've deposited, they will give you some particular interest. Now they've converted that money that you've saved with them. It's not as if they will leave the money idle. So they will give it out to people in form of loan, which they will now charge their own higher interest. Right. So which means they need more, they need you and I to deposit more to be able to have that cash to give out. That's a typical flow of a bank. Right. So the same thing also applies to all this fintech that gives loan out as well. So they need you to save. The more money you save, so it's either they turn that money into an investment, right, which they give out to other institutions to use, or they give it out as a loan to either individual or SME. So for this one, we are saying, okay, this our own, we just be using the money, we give it out in form of SME, and also we invest some of them in some other business activities. Is that clear?
Okay, so what I'm trying to consider is this customer's deposit. So what other things can they benefit using our platform? Because if you are performing payments through the subscription or something, we are charging them 1%. So probably they can get all this thing done at some other institution at free. I mean, for free. And we're only giving them 10% per annum. Shouldn't we consider probably some other benefit they can get done aside from them just putting their money and just getting 10% interest?
Perfect. Now, Joseph, you are thinking like a typical business person, right? Because yes, what if they can get all this somewhere else? Because we need to also consider our competitor, and those are the things that most people usually leave out. I wanted to mention this. So maybe if you are using our platform, any subscription you are paying, there should be a corresponding thing, not only about yes, you are getting 10% per annum. Could decide to invest it in some other thing and have higher percent, and that's why it's easy for people to just fall a victim of all this our our funny scheme, right? Because someone is now promising you like 20% per annum. I'm like, this guy and nothing more. So I think this subscription, we can make it free. We can make it free for them, right? Okay. So for this our subscription, what happened? Did I deleted something? Okay, looks like I deleted something. Or is it that my Excel? Okay, looks like my Word document is acting funny. All right. Now this is strange. This is strange. This is strange. So I think let me just save it first. Okay. Let me save it first. Then let me try and close it and open it again. Okay. Excel can be funny, and I think I'm also using in-house Office 365. So most time when they are doing that updates, usually see something like this. Okay, I think we are back. So I say maybe you can make our subscription free, right? And also we think about some other benefits so that kind of form a basis, or at least for acquiring more clients and all those things, right? V Joseph.
Yes.
Okay. All right. Thank you for that. So let's make this free. for now. But we,
Sorry, Victor, please don't delete the 1%. It's good you
yes,
leave it like
yes,
one.
exactly.
Yeah,
Let's make it
1%.
0%, 0%. So in case we decide maybe after year 2, we might start charging them, or after year 3 or so. So I think 0% is fine.
Thank you.
I agree with you. Yeah. So average transaction loan per customer, so this per business, per business. So I think so. If we are talking about business now, definitely this 10,000 might be way too small, right? So like average, how much should we look at? So remember, we are dealing with business SMEs, not individual loans. Like how much are we looking at?
100.
100. Okay, so let's say 100K, at least average of 100K, any business can get in a month, right? So we're still going to determine their payment plan and everything. Average period expected to plan this. Okay, someone is trying to write on my screen. Let me stop the animation. Okay, all right. Okay, so what other things do we need? What other things do we need? What other things do we need? Let's take a look at this closely. What other things? What other things? What other things? So I think we also need I feel 100K is small. Yes, it's small, but at least you need to have that assurance first. So we can always increase it, don't worry. But at least for a start, you first need to gain their trust. You need to gain their trust before you start giving them heavy money, right? So average times business can take a loan in a month. Let's also make that 1 time, at least for now, right? So don't let's risk that by giving them too much. What if they don't get to pay, right? So we also need to make provision for bad debt and all those kind of things. So I think we are good for now. So for our subscription, we said we are keeping that as 0% for now, right? Right, then investment facility fee. I think by the time we get to our Excel, when we are creating our revenue schedule, we can always fill out every other thing. So what's your plan for staffing? That is, how many personnel are you starting with, right? So I think because of our time is really moving fast. I feel we should be able to fill the rest on our own. Or should we do it now? Should we do it together now? What do you think? Should we do it together? Should we do it together? Should we do it together?
Yes, yes.
Okay, all right. Okay, all right. Okay, I'm considering the time as well. All right, so let's look at the number of personnel that we can have, right? So I think we can, by the time we get to our Excel, we can list everything out very well, because definitely most times, that's what the clients will do for you. But let's say average of let's say 20 staff, then average salary. So by the time we get to our Excel, we are going to break this down very well. So because of time, so average salary per person, let's just say at least 150, or let's say 200K per month. So we are going to break everything down by the time we get back to our Excel, when we are extracting everything to our Excel model. Can you list your expenses? So let's just look at some random expenses that we know that we incur. Utilities, right? Which other one? I think we mentioned licenses the other time. We need our rent, right? So then we need your subscriptions. You have some subscription, you need your internet, right? I think internet and subscription usually go together at times, right? So which other one? I didn't get that. So you can type in the chat box as well. I didn't get that. So office, okay,
Yeah,
office supplies.
office
So let's
supplies.
call it office supplies, right? Which other thing? 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 So just okay, yes, maintenance. Some maintenance. So I think this maintenance will come into 2. You have maintenance, then you also have your site maintenance, site hosting, even though some will be as part of the cost of revenue. But
That maintenance can be repairs and maintenance.
you said
Repairs and maintenance. Repairs and maintenance.
okay, repairs. Okay, let's call this repairs and maintenance. Okay, perfect. So it's just for you to have an idea. So most times utilities, let's call this, let's say average of 300K per month. Okay, let me write that in full. Our licensing. So licenses, what is the average money? So they just make provision for 100K. So that will be around like 1.2. Then our rent, I think we already have that. We are saying 5 million per year. So then so let's say this per year. So we know that our subscription, average subscription that can be done. What's that? What's that? What's that? What can we put there? What can we put there? So should we put something like 100? So remember, we can always update this. That's the good part of what makes it a model. So for our internet, let's say 50K, which I think might be more than that. Then our office supplies. So let's also make that 50K. Repair and maintenance. At least that should not be too much. This per month. Then hosting, you can always update this later as well. Right. So can you give a rough projection of your sale and everything? So I think with this now, we are good to go. We are good to go with this. Right. So for today, this is where we'll be rounding up our session. And then next session, that will be communicated to us. Right. I would have loved to have a session tomorrow, but I kind of have some schedule coming up tomorrow. So definitely you get a mail from us. So what I want you to do is this. Yes, this I will definitely share this with us. I think let me just share it now. Let me share it now. So this is what I want us to do. Get using this as a sample case. You can, so let me put this field in front of it. Let me number it to file 3. So let me drop that in the chat box for us. So how many sessions are we going to have? So time is good. Time is great, right? But based on the plan, we expect to have 4 to 5 sessions, right? If you're able to complete everything, that would be great within that session. But if need be for us to have extra session before, so that we can capture as much as possible, we might need to do that as well. And also remember, we have our valuation class coming. Yes, I think we make the session weekends. Yes, we understand that some of us are busy and all the rest. Or do you want us to put maybe after working hours during the week? Would that be fine by us? So maybe just 2 hours, 2 hours, 2 hours, 2 hours. So I understand that some people that are staying in Nigeria and Lagos traffic. So I think weekend like this is okay. It's okay. Yes, weekend is fine. All right. So I've dropped the file in the chat box. I hope we all got that. So download it for this. So
I think weekends are better for me.
Yes, everyone. It's better for everyone as well. So I think that is good. Yes, weekend is good. So I've also dropped the file again. So by the time I'm sending our next mail, I will also attach this Word document as well. So next session, what we are doing is learning how to extract your templates, your data into your model. That will be the next thing that we'll be doing. I've dropped the file in the chat box. Let me drop that again.
Okay, Victor, thank you for the session. But please let them consider us having records of the video being shared.
Okay, as I said, that one I'm not really certain about it because there are a lot of costs attached to we getting the recording converted and then uploading it again before we will now share that. So I really cannot make that decision yet. And you also remember the session is all free. So the call is not my own yet. All right, but I hope something will be done at the back end. Likely, if you have some support or some things like that. As I said, guys that are working at the back end, we also need to give them some things and orders for the logistic and management. So I don't know. The call is not. I really cannot decide on that for now. All right. Okay, so let me just try and share this with us. So I've dropped it in the chat, but in case you did not get that, I think you can drop a link where you can just download it directly from Google Drive and download it and save it on your computer. Yes, so I've dropped the link as well. Okay, all right. So thank you, everyone. I believe you all enjoyed this session and you're able to learn 1 or 2 things as well. So say, can we get the slide as well? The slide is my own resource, right? Right. It seems you like the slide, right? So thank you, everyone. We've come to the end of the session, and I'm quite sure you've learned one or two things from what we've done today. I'm quite sure you've taken a lot of financial modeling courses. What we've treated today is not something you can just see anyhow on any learning platform. So I say very big thanks to everyone. Thank you for your commitment. This is all we need. This is what we want to see from you. Thank you so much. Thank you so much for the recording being made available. As I said, there are some costs attached to it, so I'm really not sure yet, right? Subscription and everything. We have to do Zoom subscription, get some guys to manage and the whole thing. So it's all comes with a cost as well. So thank you, everyone. Thank you so much for your time. Time is very precious, and we're glad to have you in our session today. So the next session will definitely be communicated to us through our mail. So let's look out for our mail as well on the information to the next session. So once again, happy weekend to everyone. And I'm saying my bye for now. So thank you, everyone. Thank you. Really appreciate your commitment. So please, in case you have any question or any clarification before we round up the session, you can just stay back for some minutes before we close. So once again, thanks to everyone. And please, let's make sure we enjoy the rest of our day. And we'll see in the next session. Yes. So yeah, I'm not sure yet if it will be next week, well, but at least you will get a mail from us as soon as possible so that you are notified of the next session. So for today, yes, no assignments. So yes, just take the case study that we've had today, look through it, try to understand how to get your assumption, just try and reflect on what we've done today. Yes, the next session, we then go straight into extracting our data. Okay, Mr. Gwenga, I've answered the depreciation of a thing. Yes, I think I answered it close to like 3 times. I pointed it out. Is it that you didn't get that part? So the reason why depreciation is included is because your assets, that's when I was discussing about that business cycle, your operating asset is assumed to be what you are using to generate revenue. So which means your asset is part of your business operation. So you cannot separate it. And that's why you need to include that depreciation amortization on those assets before you can have your operating profit. So if not that guy that we call Ebitda would have been our operating profit, because we are saying it's more like the core business operation. But we need to also remember that yes, an operation is not being isolated, right? There are connection to it in the business, and one of the important connection is that operating asset, because that is what you are assumed to be using to generate that revenue. So remember, depreciation, yes, they are really not cash of a thing, but depreciation is saying, oh, we've incurred these costs and we've identified it in our cash as a whole, but we need to still do what we still need to expense it. So that's why we need to still go back to your cash and add that depreciation back, because you've deducted it as a whole when you bought that asset. So based on that depreciation is also part of your business. It's part of your operation. So it must be identified before we call it our what? Before we call it our operating profits. I hope that answered that.
Thank you very much. Very clear. Thank you.
All right. Thank you. Okay, so for the file, I've dropped the link so you can download it directly from the link as well. So that's a very big thanks, everyone. Hope to see you in our next session, and bye for now.